All right. Good afternoon, everybody. We're going to get started here just momentarily. Give me a quick heads up. Make sure you're tuned in, turned on. You guys hear me all right? Feel free to chat in where you might be joining us from today, and we'll start here momentarily. All right, good deal. Hopefully you can see me, you can hear me all right. Welcome, everybody. My name is Don Kaufman. This is a Theotrade presentation, Ultimate Trades. As I said, we're going to start here momentarily. I'm just going to go through a couple of informal comments before we do officially get started. Make sure everybody does hear us all right. Some of those informal comments include yeah, you can ask questions. By the way, I'm reading some of the chat rooms that we have up and running. We're actually broadcasting this into a number of different venues here. So I always ask everybody where they're joining us from. Today, I will be broadcasting from none other than Payson, Arizona. It's a small mountain town about an hour and a half outside of like Scottsdale, Arizona. I'm headed back home here, hopefully in the next 3 weeks or so, back to the Virgin Islands into St. Croix. Nevertheless, we're freezing up here right now. I'm ready to go back to the island. With that, a few informalities that I always like to kind of mention here. Number one, as I said, you can ask questions. I'm reading some of the chat rooms in real time. By the way, that's the other question that always comes up. Can you, in fact, ask questions? You can. And this is, when I say ask questions, and is this live? It is live. I mean, here we are on Friday, February 15th. Sorry, Friday. February 15th on Tuesday. I'm starting this off the right side. Looking at the S&P futures, up a whopping 70 handles this morning. So yeah, feel free to chat in. Again, I'm always curious where everybody is joining us from. Long Island, sweet man, it's where I'm originally from. Lived a little bit of everywhere though over the years. So let's go ahead and get started. Everybody good? Everybody hear us all right? Last call, Singapore. Okay, what time is it, man? Singapore. It's got to be at least 2, 3 o'clock in the morning. That's yeah, at least 1 a.m. There we go. 1 a.m. in the morning there in Singapore. Good stuff. All right, Jerome, I'll try not to keep you up too late over here. California. So far, Singapore kind of takes the cake. I many years ago, back in about 2008 and 2009, I actually opened the Thinkorswim office in Singapore with many a trip out there. So all right, without further ado, let's get started. Welcome again. My name is Don Kaufman. You are watching Ultimate Trades, a Theotrade presentation. So what is Ultimate Trades? It's a high probability income generator, and that's specifically what we're going to be discussing today. As I said, a few informalities, a risk disclosure. We're not financial advisors nor broker dealer. I spent a pretty significant amount of my career not only trading in Chicago, but I also spent about 15 years working with a brokerage firm, both Thinkorswim and TD Ameritrade. I'll discuss my background here momentarily. I am no longer in the broker dealer business. This is why you're here today. And this is, I think, critically important because I like to really hit upon, like, listen, if you're going to spend, the next 90 or so minutes with us, and by the way, I'm always adding, always adding stuff to presentations. So if you think you've maybe seen this before, you haven't, because there's always some dramatic twists that I've added in here. Today is definitely not excluded from that. But let's go through some of the key points of exactly why you've tuned in for, let's say, the next 90 minutes to this. Number one, we're going to talk a little bit about what ultimate trades are, why they're so ideal for the current market environment, so you can potentially generate monthly income. I mean, that's what, again, a lot of people are here for, is to ultimately to convert whatever you might be doing inside of markets into some kind of income generation. The second point, I'm actually going to bring this one up right away. You're going to learn a couple of trading symbols that professionals use on a daily basis to create ultimate trades. By the way, I'll also describe exactly what the terminology of Ultima happens to be. Number three, you're going to learn how and where you can find edge as a retail trader. I think that that's absolutely critical. By the way, do not think for a second that being retail has any drawbacks these days, because absolutely unequivocally does not. I've been both on the institutional side, I've been the market making side of this business. I am now a retail trader. That's not a negative designation by any stretch of the imagination, but I'm going to talk expressly about where retail can find edge, because it absolutely unequivocally does differ from the market making side of the business, from the institutional trading side of the business. Number 4, we're going to learn to reap the benefits of high probability trades while learning how to mitigate some of the exposure. The bottom line is, it's great to have high probability trades. What you have to be in tune with is how to limit large losses. Number 5, we're actually going to talk a little bit about what products are going to work for Ultima, the most viable candidates, right? And what is a recipe specifically for disaster, which is, a lot of people are kind of like moth to the flame for disastrous trading vehicles. Come on, who are you? Admitting it is the first step today. Anybody know what I'm talking about with disastrous products? Like, people just, when crazy things go on in the marketplace, like the AMCs and so forth a year ago, GameStop, they couldn't wait to get their capital in the ring for volatilities that they simply don't understand. So we're going to discuss a little bit about that. Again, a few informal aspects over here. One thing, I refer to this particular indicator, the auto expected move indicator. I refer to it constantly, okay, as our free gift to you. Stay with me right until the end of this webcast. We will provide you a link directly to the auto expected move indicator, right? It's an indicator, it's a $500 value, but we constantly cover in any weekend update that I might do, any videos that I might put on when I'm trading live. In fact, I'll even show it to you here momentarily. By the way, I have a screenshot of this, in Tesla, but I'm a little bit more dynamic than that. I like to show a lot of live trading application, but let me explain exactly what we're going to do. The auto expected move indicator, okay, is unequivocally the most robust code that was ever developed, okay, for a script calculator, which again, I'll show it to you here momentarily. We provide that to you simply because I think it's an invaluable tool to be used on a day-to-day basis. So stay with me right to the end of the webcast, and I will give you a web address where you can actually go grab the code itself and import it and have use of it forever. Again, it's just, I don't think it's fair where people show an indicator and then don't give it to you, charge you $500. We use it constantly. I use it constantly. You should have access to it. By the way, the indicator does look like this, but that's not very dynamic. As I kind of referenced a moment ago, I trade live. I trade live throughout the course of this presentation. One of the reasons I personally like to host, okay, webcasts only really when the market's open. I'm done with doing this stuff at night. I'm done with doing it, after market close on a weekend. It's not dynamic. You want to see the market. You want to see people execute trades, and I get it. So I'm emphatic about the examples that I provide to you today, okay? Everything that I do in this marketplace, this is completely no holds barred. I'll show you every detail inside of a trade, inside of my account, and I feel everybody should do that. By the way, these are just some positions that I've created in here. I'll explain all of this as we go along today, but the indicator that I showed you a moment ago, it's the auto expected move indicator. I'll bring up, for instance, Apple, and this is simply a 9-month chart on Apple. Let's go apply auto expected moves. What the auto expected move is, it takes what the option market depicts risk to be. And I'll just give you an example. Like Apple. Apple this week is supposed to move up $5 or down $5. And you say, where does that information come from? How do you know that Apple is supposed to move up $5 or down $5? My answer to you is, I don't know. The option market knows. The cool thing about the option marketplace, what options do is they put a price tag on forward risk. They actually are handicapping forward risk. When people look at options, they look at them all wrong. All wrong. They just look at the price, right? But there's a 3-day option and a 10-day option, 17-day option. You know what the next 10 days? There's $1 billion says we move plus or minus $6.50. And that's what we call expected move. Okay. That expected move is just an incredible tool. especially when you can actually plot it on a chart. It doesn't change. It's static throughout the course of the week. What's amazing though about it is how often we adhere to expected move. Now you think of the most wild product ever, something like Tesla, and then you look at Tesla and the expected move and like, look, it handicaps risk beautifully. It's not that we can't cross outside of expected move. I'll explain this a little bit more as we go along. Okay, but this is, again, as I said, it's an invaluable tool, and it really it's derived from the options chain. All right, onward and upward. A few housekeeping items. Listen, what I am going to discuss with you today is a skill set. I'm going to go in quite some depth. Now, before anybody freaks out and is worried about I'm going to go too deep or not, deep enough, okay, I have geared this presentation. Okay. Initially, something is going to be for novices. Okay. Later on, for even the most extreme traders, you're going to gather quite a bit of information. I tried to get in both sides of the spectrum, which is difficult in the midst of a 90-minute presentation to kind of hit both the absolute novice and some of the most extreme. For those of you that are brand new today, I'm telling you, sit back and try to grasp big, broad strokes of logic. When I talk about logic, like strategy, what am I doing? Worry about probabilities, worry about price. For those of you that are a little bit more experienced, okay, you want to grab the little nuances. Okay, what exactly am I trading? All right, and we're going to get down to the finite details. So, a few housekeeping items. Again, it's a skill set. I urge you to pay attention. There is a huge amount of education we're going to go through in the next hour and a half. Shut the door, turn off Skype chat. Okay, get rid of Facebook. Everybody else is. Phones on silent mode. Kick out the kids. Definitely the kids. The dog can stay, but you took the time to be here. This is going to be important. Focus. All right. This is a little bit about me. I don't do much of a big biography on myself over here, but people constantly ask a little bit about background. So I watched order flow for 15 years. And in large part, that is actually why I'm here. I mean, that's kind of what has brought me to this place. For those of you that don't know what order flow is, I'll explain that here momentarily as well. But I always get the question of how I got involved in this business. The only answer I can really give you of how I got involved in markets is I grew up around it. I had family that traded at the CBOE. CBOE is Chicago Board Options Exchange. I had an uncle that started a trading firm back in the early 1970s. He grew the firm from one seat in Chicago. By the time he kind of hung it up, which was in the mid 80s, he had grown the firm to over 500 seats on exchanges worldwide. The firm was actually called O'Connor and Associates. In 1992, he sold O'Connor and Associates to the Swiss bank. It's still the driving force behind UBS to this very day. But I kind of grew up around it, and I was always around trading. So people always ask, like, when did you learn this stuff? I don't know. I mean, I remember like Thanksgiving dinner, 13 years old, talking about, deep in the money options and so forth. And it was just, you grow up around it, you get used to it. Right out of college, 3 weeks out of school, I ended up in Chicago. A short time after ending up in Chicago at the ripe old age of 22, I ended up in Chicago. I traded there for almost 2 years. I was then invited to a startup brokerage firm. I met some traders on the floor. They worked in the OEX pit. That firm was called Thinkorswim. I was actually on the executive team of Thinkorswim, and I actually built the education division of Thinkorswim. I was there when we took the company public in 2007. I mean, I started with them pretty much from day one. We were there when we took the company public in 2007. I was there when TD Ameritrade acquired us in 2009. And from roughly 2010 to 2015, I ran the education division of none other than TD Ameritrade. So I do have quite a bit of experience, obviously, in the brokerage side of things. By the way, everybody always asks me why I ever left. I had a 5-year lockup clause. After TD Ameritrade purchased Thinkorswim, they signed me into a 5-year deal. I spent exactly 5 years and 1 day thereafter. I exited, and a year later, we launched Theotrade. Several Okay, several individuals that were originally at the startup of Thinkorswim have subsequently followed us here to Theotrade, all by design. And that's a lot of the instruction crew here, specifically at Theotrade. So it's a little background. Now, as I said, what brought me here today is we studied order flow to build education at both Thinkorswim and TD Ameritrade. We studied the order flow of retail traders. And effectively what I'm saying is we could see everything that you did. If you tell me a certain strategy, I can actually tell you the viability of the strategy, right? Think about that. You know, you're like mom and pop that went out there and sold a covered call. We knew everything about every nuance in order flow that ever went through the Thinkorswim and TD Ameritrade pipes. Effectively, if you've ever routed an order, you have been studied. And it's actually pretty shocking when you start to think about it. But what comes to you today and what comes to you from Theotrade is from literally watching billions in other people's mistakes. By the way, just to make you feel better about that, like we didn't go into your account and be like, what is Mike doing today? That's not exactly what we did. We used big data. We would actually look at subsets, for instance, of 200,000 accounts and said, have you ever done an iron condor in your account? And if the answer is yes, okay, what was the viability of that iron condor? And we'd actually look at certain, again, subsets of data using an entire internal team at TD Ameritrade. Really cool stuff. But what you will learn here today, this is what works for retail traders. Okay, I don't put a lot of weight into market making experience when it comes to retail traders. Okay, we know here at Theotrade what works and what doesn't on the retail side of the business, and that's exactly what I'm going to discuss today. Other aspect here, I always like to throw my email address in here. We do use a common inbox here at Theotrade. So if you ever need to get a hold of me after today, just go to support@theotrade.com. Again, support@theotrade.com. I'm going to bring my little writing pen over here. Just put Don in the heading, and it'll come directly to me. But if you ever need to get a hold of me, listen, we're available. Like we answer emails, and I answer client emails constantly. We have 6,000 clientele here at Theotrade. I still answer, a few hundred emails a week. This is a couple of TV appearances. This is actually TD Ameritrade TV. I do a weekly spot there. This is CNBC. I do very frequent spots there. I've actually done a lot lately with CoinDesk, a couple other media sources. Let's get to it. What are Ultima trades? The first glance, when people see this and I say, what is Ultima? They immediately kind of look at this and they go, ultimate. And I go, no, it's not ultimate. It's Ultima, okay? The starting point for understanding Ultima, okay, is an entire trading genre now, okay? And I'm going to explain exactly what that genre happens to be. The first point, higher volatility. I think we can all agree that in the last few years, really since the onset of COVID, that the marketplace has had significantly higher volatility. In fact, to quantify that, I don't think it's fair, again, to just say something without putting quantification behind that. But to quantify that, let's go look at VIX. Now, VIX, when I say VIX, it's S&P 500 Volatility Index. We're going to look back for like the last 15 years. And all I want to point out in this particular case is that pretty much since the onset of COVID, right, we have been in, roughly speaking, it's right here, it's higher volatility. Okay, I mean, the lower end of the volatility is where the upper edge of the volatility was for many, many years. So the first thing, again, and we go through here, there's higher volatility, but volatility ain't all it's cracked up to be. There's also incredibly high skew, which I'll talk about here in a moment, okay? And when we start looking at like the VIX, most people are familiar with the VIX, yes? How many people here have heard of VIX? Play around with VIX, looked at VIX. Come on, people, admitting is the first step. So if you've ever looked at VIX before, a lot of people do look at VIX. VIX is kind of like, if you will, like I don't want to put a lot of weight into it because it's what I would term my predecessor's volatility indicator. So, some of the individuals I worked with while growing up at like Thinkorswim, I literally grew up at that firm too, because from age 22 to basically 30, that was the growing up stage over there. But some of the guys that were 10, 15 years older, they always look at VIX, and the newer trader looks at like volatility of the volatility, which is skew, which is VVIX. But when Ultima comes into play, what a lot of people don't realize is that in trading, you have what they call vega okay? And then you have Vama, and then you have Ultima. And Ultima, okay, is actually a tertiary Greek. And if you've never heard of that before, what is Ultima? Ultima is specifically how, okay, we are profitable in the present market environment. Okay, it's the volatility, the volatility, the volatility. And that's what Ultima really is. So it's not ultimate, okay, it's not a play on it. It's the ultimate trading system. It's Ultima. And Ultima is a genre of trade that we're embarking upon right now, which I'll explain here momentarily. The next aspect, skewness. Skew, since the onset of COVID, has been phenomenal. Okay, I don't want to get into like distribution curves, and people get all kinds of crazy about this, and they go, "Oh, it's elliptic. It's this curve, it's that curve over here." The bottom line is, since the onset of COVID, there has been a tremendous, amount of skew, and skew is actually a distortion, if you will, in pricing in markets. So skew is one of the many aspects that we go after right now. So this happens to be, and I'm just going to show you a quick chart over here. This is skew. And I said, I'm going to give you a symbol a lot of professionals use. They use the symbol skew. That's actually the symbol on pretty much any trading platform. That's skew. Excuse me, skew, since the onset of COVID, has been record high. Just record high. Like, average skews back in this time frame are down here. We've dropped a little bit here, but that's because we're seeing some volatility. But nevertheless, skew has been immeasurably high. I mean, we saw a 170 print a few months ago on skew, immeasurably high. The last aspect is to further on that is, you hear about this stuff, you're like, oh, yeah, volatility. He's talking about VIX, and he's talking about skew. Listen, all of this is for nothing unless you know how to use it. Okay, how can we use this stuff? Skew to our advantage. Skew provides edge in the sale of out of the money options. Now, I said the O word. That's the second or third time I've said options, but skew provides edge in sale of out of the money options. Listen, I get that some people are not into options here. That's fine. Is that okay with everybody? Is it okay? I like that. Somebody just chatted in. They said, I look at it every single day. So few retail traders even know what skew is. I look at it every day. It's only calculated once a day, but skew it's immeasurably important in the market. I'll show you something else I look at that's outside the scope of what I was going to talk about, but I'll show you something else here in a moment. Options now are providing, insight, not to just what's going on here, but it's insight to what's going on, in the not too distant future. But the cool thing about options is there's so much edge if you know where to look right now. So many traders are currently buying options, and it's in effect tweaking pricing to be beneficial for premium sellers. Think about that. I think that that's a very, it's a very out there statement. Like, I really kind of put myself on the line. I go, everybody's buying options right now. And because there's so many buyers of options, they're tweaking the curve. Now, how do I know that so many people are buying options? Okay, I know this. Firms like Robinhood, they had like amazing account openings for the entire first year of COVID. They opened up more accounts in 1 month than they had opened in the previous history of their entire firm. Think about that. In the onset of COVID, every major brokerage firm opened up record amounts of accounts in the last 2 years. In fact, I'm going to show you this in just a second. Why is that so important? If you look at a firm like Robinhood, which some people trade with, and by the way, I'm not trying to disparage Robinhood or any other brokerage firm in any way, shape, or form. Okay, I'm not trying to say that to be nice or not nice. I'm just telling you, that the firm itself, they don't allow, like Robinhood doesn't allow you to do very much. If you open an account with $5,000 or $10,000, they just let you do what? Let you buy options. Almost every firm does that, even TD Ameritrade. You open up an account with TD Ameritrade, and TD Ameritrade now is actually owned by none other than Charles Schwab. But if you open an account with either one of these firms, if you have less than $10,000 in the account, or even $25,000, or you could open an account with $500,000. But if you don't have a lot of experience, they just let you be an option buyer. Think about all the people that just recently opened accounts in the last 2 years. Almost all of them can only do one thing. They can only buy options, okay? And it's actually making the premium beneficial for premium sellers. Now, retail traders gone wild. This is recent, okay? How recent? This is actually Friday. Okay, I just figured I'd take a quick screenshot. If you've never seen this before, this is what they call the OCC contract volume. It's the Options Clearing Corp. OCC, it's the Options Clearing Corp. We traded, excuse me, 54 million contracts on Friday. Yes, I get choked up when I say that. 54 million contracts is out of this world. If you take a look, the 2022 average is 43. Okay, February 2022 average 42. Last year at this time was 43 million. That number is absolutely astronomical. We've had some volatility lately, contract sizes through the roof. Just to give you an idea, because a lot of people look at this, they go, "Oh, who cares?" I left the brokerage industry in 2015. When I left the brokerage industry in 2015, the average daily option volume was closer to about 16 million a day. We were lucky to do 20 million contracts in a day. Now, okay, we're averaging that. Just what, 5 to 7 years later, we're averaging over what? Double that. It is absolutely amazing how many option contracts. And the reason that I'm bringing this up is you need to understand something about options. I'm not here to just be like options, 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 but I'm here to tell you without unequivocation, options now are a cart leading the horse. If you think you know where Tesla is going, you must be looking at the option market. If you think you know where Nvidia is going, the option market is driving the order flow to move stocks these days. That is what moves stocks. That's what the meme craze was all about. The meme craze when it was AMC and it was GameStop and it was, 50 other like little stocks, okay? It was all about the options marketplace unequivocally. It is retail traders gone wild. This I am emphatic about because it's imperative to understand, okay, that this is what's driving markets these days. Now, learning to sell options. So those of you that have had some options experience, fantastic. And those of you that haven't, okay, it's okay. Like breathe, people, breathe. We're going to talk a little bit today about selling options. But the interesting thing about selling options is no matter how many times I bring this up, okay, when you start talking to people that have done some trading, not a lot, but they have done some trading in options, they always hear through the grapevine that same little chirp. Selling options is the way to make money. Selling options is the way to make money. How many people have actually heard of that before? Okay, anybody? Anybody? How many people have heard before that selling options is a great way to make money? Okay, only like a handful of people come in here. It's okay, you can chat in. All right. By the way, I like interactive groups. No matter what they say, I like it. Okay. By the way, if you see me looking around here today, this screen's got slides on it. This screen's got markets on it. This screen also has your chat on it. This screen over here has markets on it. So I'm trying to do this off of 3 screens. At my home office, I got like 6 screens over there. Okay. Lots of caffeine pouring in from all directions. It's good. It's very good. Anyway, I like it. Somebody said I primarily sell extrinsic value. It's smart. It's time value. I'm really going to hammer into that today. But those that have actually dabbled in the sale of options, they find out real quick. They're like, selling options is working. It's working. It's working. It's working. Bam! They get hit by a truck. They're like, there's a lot of risk in this. There's a lot of risk. What we're going to do today is we're going to actually separate myth from real risk, fact from fiction, cut all the garbage out of it. I want to focus like today, hey, what's going to work? What's going to work? And not just for like the here and now, but what's going to work in the future. We're going to talk a little bit about selling option premium. As I said a moment ago, don't panic. You can do this. Maybe you know nothing about options. That's okay for today's session. As I said, I try to hit an extreme on one side of people that have traded and an extreme on the other side, people that haven't. Okay. Absolute novice to the most extreme. And I'm going to hit everything in between. If you know nothing about options, as I said, that's okay for today's session. Again, for starters, big concepts, okay, big broad strokes of logic, and we're going to jump right into it. By the way, one other caveat that I think is critical to mention. Selling premium can be done in small accounts, okay? You can now even sell premium in your retirement, specifically your IRA. In your IRA, okay, they require you to have $5,000 to be able to sell options, okay? Anything goes, anything goes. The interesting thing about this is some of the brokerage firms will say, you can't do that. You just got to know, okay, the loopholes to jump through, which brokerage firms will play ball, which ones won't, okay? Remember, this is your capital. Don't ever let your brokerage firm dictate what you can do with your capital, right? You can trade, you can now trade in small accounts with as little as $2,000 in a margin account. You can do anything you want. And I am emphatic about that as well. You can do anything you want. I spent 15 years in the brokerage world. I'll teach you everything about day trading margin requirement and how to circumnavigate it, how to actually circumnavigate some of the margin requirements. There are products that are now more efficient. All right, let's dive right in. Don't panic on me here, people. Don't panic. There's a lot of different facets of selling premium. When we talk about the terminology, selling options, okay? A lot of people have actually, heard about selling options. Selling options is also known as selling premium. So selling premium is one of the definitions. So what I'm getting at over here, selling premium can be referred to a number of ways. Selling premium, credit spreads, short call spreads. That means selling out of the money call spreads, selling out of the money put spreads, delta neutral. People have heard that terminology, delta neutral. Delta neutral is also very often associated with selling premium. Doesn't always have to be. Selling naked. I'm out there, Jerry, and I'm loving every minute of it, right? You can sell naked. Selling premium, though, can be used to create bullish or bearish positions, but predominantly and generally today, it's actually going to be considered market neutral. What's market neutral? What I'm getting at there, I'm not going to see a lot of MACDs, a lot of Fibonacci's, no Bollinger Bands really today. This is not so much about setup. This is about probability and profitability. Okay, so we're going to start to bridge our way into a little bit about probability. Let me get a drink of water over here as we go. All right, better, much better. Probability and profitability. When I started to say a moment ago, grasp big, broad strokes of logic here, this is kind of what I'm talking about. I got to get you to understand that everything you do in this business, okay, is based in probability. Whether you trade stocks, whether you trade options, whether you trade futures, you can put a probability to it. The one aspect that it always gets me is that people email me every single day. And when they email me, they usually say stuff like, hey, okay, how often do you write? I mean, people ask me that still to this day. When I say, how often do you write? I don't know, like 90% of the time, they go, oh man, that's unbelievable. Let me tell you something. You and I, we can create trades with a 90% probability of success all day long, and you can still lose money. Do not get led down the road. That probability alone makes you profitable. And again, as I said, I like in these presentations to separate that fact from fiction. I know that people all day long, look at my track record. I was right 90% of the time. You were right 90% of the time until you walked out into the street and got hit by a Mack truck. What good does that do you? It doesn't. Probability alone does not make you profitable. Got to remember that. It's going to come up again. It's later on the test, but probability alone does not make you profitable. Okay. Markets are always going to be a trade-off. It's always a series of trade-offs. Higher probability, maybe higher risk. You could be right 90% of the time. You can still lose money. So where can you find an edge? Like, what is edge and where can you find it? And that's what people are typically here for. Good, because we're going to show you something really important. Now, I'm going to bridge our way into the very first strategy. What I'm about to do, okay, I'm going to start in very, very simple terms, and I'm going to actually work up from there. When I say I'm going to start in simple terms, okay, we're going to give you just a little bit of an introduction to options. And this is the part, like, even those of you that are experienced, I'm telling you, pay attention. I'm actually like pointing to the screen where people are talking right now. Pay attention, because this one's going to be important here in a moment. So we're going to go out and we're going to look, not trade, but we're going to look at a $50 stock. It doesn't matter what stock it is. A $50 stock, there's a million of them out there. You know what? There's a lot more $50 stocks than there were, for instance, 3 months ago. Okay. It was tough in an example to even describe a $50 stock. You couldn't even use, like, I always use like Twitter for an example, like, oh, Twitter's a $50 stock or a $36 stock. Anyway, this is a stock, and I always use my example. I call it stock. Okay. Stock. So stock is trading right at 50 bucks. Now, let's assume that in this first example, we do not own stock. We don't want to own stock. We never want to own the stock because the stock ties up a lot of capital. But moreover, I'm not even worried so much about the capital. Some people say, I have the capital, not a problem. Yeah. What good is the capital if that stock can jump down 50 bucks? The geopolitical risk, the Fed risk right now, people, this is ridiculous. Okay. Going out there and just loading up on stock it's ridiculous. The risk, okay, you can taste it, you can touch it, you can smell it. I mean, yesterday markets are down big, today up huge. Okay, wait, they're not up huge anymore. Give it 5 minutes. This is Mr. Toad's wild ride. And this is first example. I'm just going to go out, okay, and I'm going to sell a 60 call. Okay, I sell a 60 call, and for that 60 call, I'm going to collect a $1, and that equals my credit. All right, so I'm going to put it right down here. I'm going to sell, okay, 60 call, collect $1 credit. All right, let's say this option is good for, let's just throw a number up here, 2 months, 2 months, 2 months, 2 months. A timeout. There's a lot of people that are brand new that have no idea what an option is. So just back up for a second. Do I own the stock? Do I want to own the stock? Why? Stock to me at this point, and I don't always agree with this statement, but at this point, your stock is worse than a gamble at this point. There's an age-old saying in this business, and it has to do with don't fight the Fed. But you know what the interesting irony of that is right now? That's a statement that you will not hear, okay, when the Fed is on the other side, okay, of trade. And I want you guys to think about that for a second. Pretty much since the financial crisis and thereafter, you hear the phrase, don't fight the Fed, don't fight the Fed. You hear the phrase Goldilocks market conditions, which is just right. The Fed's got your back. Everything's going to go okay. And if it doesn't, it's okay because the Fed's got your back. Now, where's the Fed? They are right in your face. Nobody turns around though and says, don't fight the Fed, but they should. Because right now, if you're long markets, and I'm not telling you to be long or short, but if you are long markets, you do realize that you are fighting the Fed. So let's push aside the entire logic of stock for a second. Okay, let's assume it has no bearing, okay, for today, meaning that I'm not going to try to predict where this $50 stock goes. All I want to do is get involved in the option premium selling business. I want to get in, I want to get out. I do not want to take extraordinary risk. And I just want to try to produce monthly returns. Sound reasonable? Okay. This stock is trading at 50. I don't own the stock. I've gone out and sold a call. Now, some of you have no idea what a call even is. So let's start from the beginning here. Okay. A 60 call. Let's not say we sold it because that confuses people. Let's go out there and say we bought it. By the way, buy, okay, buy, palms to me, sell, palms to you. All right, this is a buy, this is a sell. I'm going to go out and I'm going to buy the 60 call. If I buy the 60 call, what am I doing? What is a 60 call? It gives me the right to buy the stock at 60. See, buyers in options have rights. Sellers in options have obligations. Okay, let's first talk about the buy side of it. Let's say that Don goes out and buys the 60 call. Why did I buy the 60 call? Why would I buy a 60 call? Stock's trading at 50, I buy a 60 call. That thing is way out of the money. I'll tell you why I would buy a 60 call. I buy a 60 call because I'm taking a long shot. I'm thinking this is one of the mem stocks. By the way, I don't call them mem stocks. I call them me stocks. It's all about me, myself, and I. Let's say I buy a 60 call and I buy a 60 call and I pay $1 for it. Now, where do I need the stock to go? I need the stock to go from 50 all the way to 60 just to make it interesting. But I don't need the stock at 60. I have the right to buy the stock at 60. Do I have to buy the stock at 60? No, but I have the right to buy the stock at 60. That's what a 60 call entitles me to do if I own it. But I had to pay $1 for that right for the next 2 months. So for the next 2 months, I get down on the hands and knees and pray to the option gods, please let the stock go up, but not to 60. I needed to 61 just to be able to break even. That to me It's a very low probability trade. I don't think there's a very good chance stock goes from 50 all the way to 60, because what could the stock do? The stock could stay flat, the stock could go down, the stock could go up, the stock could go way up to 60 and then just stop at 60 just to torture you personally. Ever had that one happen? Okay. But the stock has to go to 61 to break even. And realistically, the stock's got to get to like, I don't know, 65 to make it even interesting. Could it happen? Of course it could. Of course it could. Okay. But that's not what we're here for today. We're not actually going to buy a 60 call. We're going to sell it. And immediately when I mention selling a 60 call, people go, that looks like it has a lot of risk. It could have a huge amount of risk. I'll explain why here in a moment. We're not just going to go out there. This is the first example. Just give me some time. Okay. We're going to sell a 60 call. And in selling a 60 call, I'm selling myself into an obligation. Okay. It's like marriage to a 60 call. So I'm selling myself into an obligation. What's my obligation? Okay. I'm obligated to give somebody my stock at 60, but I don't even own any stock. I am selling what is termed naked. I'm selling a 60 call. I don't even own the stock. And you go, how could you do such a thing? My brokerage firm won't even allow it. Don't worry about all of that. Don't even worry about the margin. I got to get the conceptual side of this through to you first. See, you sell a 60 call. Breathe. What can happen to you when you sell a 60 call? Well, first of all, you collect $1. If you sell a 60 call, you're selling yourself into an obligation to give somebody stock at 60. First of all, let's say the stock stays flat. If the stock stays flat, I keep $1. If the stock goes down, I keep $1. Even if the stock goes up to 55, I still keep $1. What if the stock goes to 60? I said, what if it goes to 60? I wet myself. But I still get to keep $1. People go, why do you wet yourself? Because it's scary when it moves against you. But think about, okay, all the movement, this stock can go anywhere down, it can go anywhere up. As long as it doesn't get above 60, you're okay. In fact, the break even of this one is 61. But what happens if the stock goes from 50, jumps to 70? You go, oh. So if the stock goes from 50 and jumps to 70, you're in trouble. Why? Okay, because you are obligated to give somebody stock at 60. So if the stock's trading at 70 and you're obligated to give somebody stock at 60, what are you going to do? You have to go, I have to go buy the stock at 70 to give somebody stock at 60. You're going to lose $10, minus, of course, the dollar you collected, but you're going to lose like $9 in that trade. That's going to feel warm and fuzzy inside. Not really. It's actually going to hurt just a little bit. But the point being of this particular trade, and I know I've made a mess on the screen, the point being of this particular trade, and the reality, okay, of the trade is a very simple one, okay? There is an incredibly high, okay, probability of you keeping the dollar. That's the first example. There's an incredibly high probability of you keeping the dollar. Are we okay at this point? All right. That's all I want to drive home. High probability, high probability, high probability. What do? You go out and sell the 60 call. We haven't talked about management. We haven't talked about anything. Okay. At this point, anybody here could do that. Okay. You could literally just, hire a kid and go, sell the call. And he goes, okay, boom. Right? Sell the call. Okay, boom. So we haven't actually done anything just of yet, but I got to get that through. Why is this such a high probability trade? Because think of all like the places this stock can go. The stock can laugh, the stock can cry. Okay. You can throw up all over the place, and yet you can still keep your dollar. It's awesome. Right? Now let's actually bring this into the context of the real marketplace for just a moment. So the context of the real marketplace, it's big, it's scary, it's a marketplace. By the way, I'm using Thinkorswim, but I also use Tastyworks. This is actually the Tastyworks. This is my monitor tab. This is just a couple of positions. By the way, this is IRA. It's just in an IRA right now. But anyway, I'll show you Thinkorswim. And, as I was saying, I was joking about like Twitter earlier. Okay. Yeah, see, Twitter is a $36 stock, but could I go out 2 months, open up an option chain? Now, some people are brand new. They've never even seen an option chain, okay, let alone actually traded one, and go, oh, here's an option way up here. Like, look, the stock's trading at 36 and I can sell a 45 call and I can collect 40 cents. There's nothing inspiring about collecting 40 cents. But as I said, okay, you could pretty much teach a child to do that. And that child could figure out like what's called probability out of the money is 90%. So this goes back to what I said a little while ago. We'll just loop it back for a second. I said, people come all the time here to Theotrade and they say, how often are you right? And I go, I don't know, 90%. How can you be right 90%? How can you be so sure of yourself? Okay. How about because I can sell options out of a 90% probability? Huh? You like that one? Do not ever be misled with that. Okay. By the way, yes, you can definitely do it in a Roth IRA because that was a Roth IRA. That's the way to go with IRAs. But again, don't ever be like misled. You go, how often are you right? Go 90%. Probability does not equal profitability. Don't forget that. That's where people get all kind of misconstrued. All right. But I'm not here to teach you to make 40 cents. We're here to generate consistency. We're here to generate, okay, premium. Okay. This is a premium seller's marketplace right now. So let us deviate back. Okay. By the way, I was joking earlier, oh, the market's absolutely up huge until it's not. This thing is it was threatening to be up huge and pulled back, and we've laughed, we've cried today. It's getting good out there. It's getting good. All right, onward and upward from here. So let us move to the next example. So selling options equals positive time decay. Okay, when you sell options, every day that passes sees the dwindling, okay, of options premium. Now that's something I'm very emphatic about certain aspects of the marketplace, and I think it's critically important, okay, that everybody here understand is that when you sell an option, everybody talks about time decay, and that you sell an option for $1 and then it's worth like 90 cents and then 80 cents. But let's review that, because here is something very, very interesting that I'm going to show you. Almost every experienced options trader, has seen this decay graph. And I'm going to tell you something about this decay graph. It's not entirely accurate. And that's, I think, a very bold statement, but it's not entirely accurate because this decay graph, okay, represents only a certain type of option. So what a lot of people experience in option trading, okay, let's say that if you would, a little pencil's moving by itself. Let's say if you would, a lot of people experience theta decay, and it looks something like this. You go out, okay, and trade an option. So you're going to buy an option. How many people here have honestly bought an option at some point, way, shape, or form? How many people have bought an option? Okay, a ton of people, right? So you go out and buy an option. What'd you pay for the option? Doesn't matter what the stock is, but what'd you pay for the option? Okay, let's say you paid $3 for the option, and the option is good for exactly 1 month of time. Why did you buy the option? You bought the option for $3 because you thought that the stock was going to move your direction, but it doesn't. Okay, so you buy the option for $3. I don't know, 4 or 5 days pass and the option starts to decay. Okay, what's it worth now? It's no longer worth $3. Now it's worth $2.80. Okay, so it's worth $2.80. I'm going to fix that. I'm going to make it look just right. Okay, it's worth $2.80. So you buy an option for $3. 3 or 4 days passes and your option's worth $2.80. So what happened? Nothing happened. And you go, that's not fair, man. I lost 20 cents. But that's actually not your first instinct. The one, I guess, I never looked at it this way when I worked at TD Ameritrade or Thinkorswim. I never looked at it this way. But 15 years in the brokerage world, first of all, 15 years in the brokerage world, you've totally become a cynic about everything, trading wise. But you've had this experience. You've seen everything. Everybody's ever talked to you. And everybody and anybody who's ever bought an option, they buy an option for $3. A couple days later, it's worth $2.80. Their first instinct is, I'm okay. Not that I'm wrong. We haven't done anything wrong. We haven't gone out of our way. I'm okay. They go, I'm okay. I'm okay. I'm okay. I've gotten thousands of emails that say, it's okay. I'm okay. So nothing happens to the stock and nothing happens to the option except it loses 20 cents. By the way, another week passes, and then you start to hit the theta decay a little bit there, and you go, your option is at $3, then it was at $2.80, then all of a sudden, okay, now the option's only trading for $2, and you go, Oh boy. Okay. Then you're like, I hope, I hope, I hope, I hope. You go from I'm okay to I hope, I hope, I hope, because now you're down a buck. Before you know it, the acceleration really starts to kick your proverbial beep, beep, beep. Now the thing is actually worth $1.30. Before you know it, it's worth 50 cents. And when it's worth 50 cents, then you went from I'm okay to I hope to this is going to hurt to I'm screwed. Okay. By the way, each one of those has its own perfect position for it. So remember, this is I'm okay. This is a hope. Okay. This is what? Oh, this is going to hurt. And that's I'm screwed. And I'm screwed means it's going out for nothing. Sorry to be so literal. How many people have ever experienced that? Anybody? Just checking if anybody's ever experienced that. This is the plight of an option premium buyer. There's nothing wrong with that. Not that there's anything wrong with that, right? There's nothing wrong with it. But what you have to understand about that decay graph, that is what we term a near money decay graph. And people are very largely misled by that. By the way, after like years of doing this, okay, yes, there's a position forever, like a hope, okay? The screwed thing over there, okay? Every trader, they think the same things, they say the same things, okay? I grew up around this. From the time, again, I'm like 13 years old, I legitimately remember a Thanksgiving dinner, okay, where there was this like almost coming to a fight argument between a cousin of mine, uncle, okay, my own dad, where they were talking about a trade that was deep in the money. Like these are the memories I have as a child. Okay. By the way, the longer you're around this business, the more skewed you get. Anyway, this decay graph is not exactly accurate for the type of option trading that we're going to be doing. That's going to become very, very clear. Okay. Now we're actually going to talk specifically about Ultima trades. Okay, let me explain what Ultima really comes down to. So now in this next example, we're going to look at a $100 stock. Okay, and this $100 stock, do we own the stock? No. Do we want to own the stock? No. Why don't we own the stock? Because it's a $100 stock. It's going to tie up a lot of capital. It's going to be like Apple. It's too much money. Or it's going to be like Facebook, and then all of a sudden there's not that much money. It lost 25% of its value overnight. Then it's like 38% of its value. But that's a different story. We're going to go out there. Okay. All I'm going to do in this example, I see this $100 stock, and that $100 stock, remember, we're going to call it stock. Stock is trading at 100. I like to use disassociation because quite frankly, I just don't care what you trade. What does it matter? All we want to do is sell premium, get back, reduce risk, and make money. Does it matter what you trade? I trade Tesla, golf clap. It doesn't matter. Okay. You got to have that disassociation in your head. You know, where I learned to trade in Yahoo. Okay. In the pit in Yahoo. That's where I learned to trade. Okay. Was I upset when it was no longer really a public company and was bought out? No, I was actually like laughing about it. I was like, because even in the pit, we knew nothing, okay, of what was going on specifically in that company. With that, I'm going to go out here and I'm going to take the same example I did earlier, but I'm going to skew it a little bit. I'm going to go out and I'm going to sell a 120 call. And the 120 call is going to be trading for exactly $1 credit. I'm trying to keep everything nice and clean. And we're going to make this one, we're going to get crazy. Let's get crazy. Okay. We're going to make this one. This is going to drive you crazy for 3 months. Okay. So I'm going to sell a 120 call. And for the 120 call, I'm going to collect $1 credit. Start with this. What's the most money I can make on this trade? The most I can make is $1. Why? Because I collected $1. When you sell something to open, I am selling myself into an obligation. I am hereby, having sold the 120 call, obligated to give somebody my stock at 120. Now, granted, that is 20% out of the money. The stock has to go from 100 to 120 just for me to feel threatened. That's quite the distance. So I sell the 120 call, I collect $1. You go, that's it? That's it. But, okay, who cares what that is? Does it matter? Okay, how we make money as long as we're making money. Because we want to show you where the edge lies. 3 months. Everybody looks at the 3 months. They go, man, you told me I was going to make money every month. We are. We'll get there in a second. But I wanted to torch you with the 3 month thing. Anyway, okay, what can happen now? Well, what can happen? So I go out and sell this thing for $1. First of all, you have to rationalize this is a very high probability. Why is it a high probability? Because the stock has to rally by literally 20% just to threaten me. So if the stock stays flat, I keep the dollar. If the stock goes down, I keep my dollar. Even if the stock goes up even 20%, I keep my dollar. Could you lose money in this trade? Absolutely, unequivocally, yes. But it would be rare. It would be very rare. Why am I showing you this? We're selling options so far out of the money. This is what I call, it's the nosebleed seats. Okay. You might as well have not gone to the Super Bowl if you had tickets that were that far out of the money. Does that make sense to you guys? Like, I mean, this is like you're sitting in your car in the parking lot, watching the football game from your vehicle, knowing that the stadium is right there. That's how far out of the money I am. I'm not even in the same ballpark right now. Okay. How does this, though, produce profitability? For that, let's actually take you to a live market. For that live market, okay, we're going to go into a product called the SPY. By the way, if you've ever like tuned in, you ever heard anything I didn't, I talk about the spiders a lot. You know why I talk about the spiders? For those of you that have no idea what the spiders are, well, they're the spiders. It's the S&P 500 ETF. It's probably one of the most prolific products ever devised. It's also one of the most liquid products ever devised. When I say liquidity, how many millions of contracts? Oh, it's only traded 3 million today. That's actually normal for this portion of the day. So it's already traded 3 million contracts. Nothing really trades much more than the spider on a day-to-day basis, right? So I wanted to provide liquidity for you. The next thing I want you to realize, you know what's cool about the spiders? They can't be taken over. Meaning, like, what does that mean? Okay. If you go out and buy Twitter or sell a call on Twitter, Twitter could be a buyout candidate. Okay. Peloton can be a buyout candidate. You can get involved in a stock and the stock gets taken over. You're like, oh, huge move. You're dead. You're gone. You're buried. It's over. Spiders are not getting taken over. So I don't have what I call that massive risk, that threat. If, you know, a monstrous move can hit the spiders, but if the monstrous move hits the spiders, everybody in the world's going to know about it. By the way, as I said, I always put my money where my mouth is. I got positions here, 31 days, 54, 58 days, 94 days. Let's open up the 94-day options. We're going to open up the 94-day options. I'm going to scroll way out of the money. And I want to make a quick point. This will work. This will work. Okay. By the way, I like to trade an option that's trading right at $1 for my example. This is not necessarily the perfect option to trade. But for my example, it works beautifully. Why does it work beautifully? Because I've been talking about the $50 stock with $1. I talked about a $100 stock with $1. Well, here's a real stock ETF for $1. So this is a $440 product, okay? And I'm torturing you by going this far out. And I know some of you that are experienced. Here is a $4.99 call, and it's presently trading for $1, okay? Let's see if is it really trading for $1. I think there's a great way to find that out. The market's 98 at $1.01. I'm going to go route one right at $1. Just a one lot. Captain one lot rides again. They're going to move the actual offer to $1 here. Watch. Okay. How did I know they would move the market to the $1? Okay. I know things because at this moment in time, I am the offer. Okay. I'm the best offer out there. If the market's 98 at 101 and I try to sell at $1, the market has to move to $1. In fact, you can even look at this and you go, what do you mean you can look at it? Okay, there I am, New York Stock Exchange. We ain't paper trading, people. Okay, so the market's 98 at $1. I am the dollar. Captain One Lot is on the New York Stock Exchange trying to sell something for $1. Got to wear your little Captain One Lot cape. It's exciting, run around the house. But if we're going to trade $1, I'm getting filled. Okay, and I'm probably getting filled at the mid price because they want to get Captain One Lot. Oh, we're close right now. They want to get Captain One Lot out of the way. So we're right on the verge of a fill. We're 98. 101 on some markets, but I'm actually tying them up at $1. Okay. So I am the best offer on the screen. And if I can beat everybody else's price, I am the marketplace. So let's assume that I'm going to fill at $1. By the way, I will fill at $1. You'll see. Okay. This is how you route orders. Look, now we're 99 $1. Ooh, the suspense is killing me over here. Anyway, let's say that I go out and I sell. This is the option I'm going to sell. So I'm going to go out and I'm going to sell. I'm going to write it up here. I'm going to sell, okay, a what? A $4.99 call. And the $4.99 call that I'm going to sell is going to be trading exactly for $1. What expiration? This one is the 20th of May. Okay. Now, timeout. Assuming that I've actually filled this trade, I go out and sell a $4.99 call. Then what do? I'm 94 days out. By the way, again, I'm torturing those of you that are experienced. You go, why would you ever want to sell something that far out in time? I'll tell you exactly why. This is Ultima. This is where premium currently lives. So if I sell the 94-day call, I'm only going to hold the position, let's say for 30 some odd days. Okay. Assuming that the market stayed flat. I know the market's not going to stay flat. We're going to get volatile. We're going to go higher. We're going to go lower. We're going to laugh. We're going to cry. Okay. I want to show you though, how rapidly an option will decay that has 94 days prior to expiration. It is a huge misnomer in the marketplace. There are phenomenal decay rates of longer term options. Watch. What I'm going to do, okay, is instead of looking at the 94-day options, I'm going to look at the 58-day options. Why? If you want to know what a 94-day option is worth 36 days from now, open the 58-day options. And you go, wait, what do you mean? Okay, I don't need a theoretical pricing calculator. I don't need all that junk. Just look at the 58-day options. Let's open up the 58-day options. So what I'm doing is I'm theoretically fast forwarding. Okay, I sold this 20th of May $4.99 call. I want to know what the $4.99 call is going to be worth. Okay, all factors being equal, exactly 36 days from now. And the answer is 30 cents. So what am I going to do? Okay, what am I going to do? I'll tell you exactly what I'm going to do 30 days from now. I'm going to buy the $4.99 call back. I'm actually going to have to pay 30 cents to get it back. Okay. I'm going to net approximately 70 cents, which roughly equals what? 70%. How can that possibly be? And why are you missing it? So I can go out and I can sell an option that is massively far out of the money. Okay. Massively far out of the money in the S&Ps. I can collect between 50 and 70% in about 30 days, okay? Nominal amounts of risk, which we'll show you how to mitigate here in a second. Get in, get out, produce a 70% profit and never have to hold it anywhere near expiration. Is that what you're telling me? And the answer is, that's what Ultima really breaks down to. Things have changed in this business. Skew has actually shifted. Out of the money options, okay, are really juicy, but options that have longer periods of time are having phenomenal decay rates associated with them, okay? Short-term options will be the death of you. You do not want to sell short-dated options. You want to be out in duration. Duration premium selling is where it is at. That is what Ultima really breaks down to. And people say, wait, so I just get out of it after 30 days? The average hold time in the trade is only about 28 days, okay? It's not realistic. This is real. Okay, when I say it's real, the trades are right on your screen. I don't have to look any further than, hey, wait, if I sell something here 94 days from now and I buy it back 58 days from now, in fact, we could even go 122 days just to make a quick, okay, example out of this. We can go 122 days out. Look, I'm just going to find an option trading at $1. Okay, here's the 5/10s. They're trading for 99 cents. Just put them in the offer at 99 cents, right? Okay, close that up. So again, that was the 110s. I just want to make that clear so everybody saw it. It was the 110s. Sorry, apologize, the 5/10s. The 5/10s are trading for right around $1, right? Let's, you know what, put them at 95 cents because I could definitely fill those for that. What would they be trading for? Okay, just about 30 days later. Go look at the 5/10s. 5/10, 5/10, 5/10. Here they are. Now they're trading for 50 cents. Okay, that's only 28 days later. You're making 50% for doing what? For sitting in the nosebleed seats. Okay. By the way, I haven't filled yet. No, I have not filled. You can actually see my order is hanging right there. Markets, they're getting sketchy. Okay. Markets are getting sketchy over here. So I'm just sitting there waiting for my fill. Look, the market's at 99 $1. Let it work, people. It will fill. That's the one thing people go crazy. It's not filling. It's not filling. It's not filling. It'll fill. Okay. Give it time. Give it time. Yeah, these 122s. You know what? Let's make another point. Let's route another one in here. Okay. Why not? Okay, here's a market of 94 at 99. Let's drive you crazy here. Let's actually route this little monkey. It's 94 at 99. Let's route this one all the way up at 97. Okay, it's going to move the market 94, 97. Ready? Confirm and send. Fires the trade. Okay, it's going to move the market to 97 cents right now. Come on, 97 cents or fill me. There it is. Now I'm 97 cent offered. Okay, you go, oh, that's kind of cool. I want to have even more fun with it. Okay, I cancel replace and come in at 96. They're going to have to move the market down to 96 cents, or they have to fill me immediately. So they either fill me immediately, okay, or they have to represent me. Represent me, baby. There it is. Now I'm 96 cents. Okay, leave them in there, filled. Okay, so I filled for 96 cents. That's 122 days out. Okay, well, what's going to happen now? Well, I don't know. I'll see you less than 30 days and probably make 50% of the trade because the market would have to approach the 510 level. By the way, has the market ever approached the 510 level? Oh no, it hasn't. Because do you realize how far out of the money that is? In 30 days, we got to get to 510 or I'm gold, Jerry, gold. By the way, if we rally, they're going to crush the volatility. If they crush the volatility, I'm going to make money even faster. So even if we rally, I'm going to make money even faster in this particular trade. That's what Ultima Trades is about. Listen, why sell options so far out in time? Maybe you noticed in the example, I sold options way out. Okay, this is duration stuff. Typically, traders sell shorter dated options, but that's why people are tuning into this webcast. That's why specific criteria is of such importance. Listen, what Ultima is really about, okay, is criteria. What criteria is, it's just definitive recipe. It's which options to sell, how far out of the money. You'll notice that today I've just been talking about calls. Why am I just talking about calls? Why not puts? I absolutely use puts, but calls are just easier for people to interpret. Whenever I talk about puts, they're like, what's a put? It's the right to sell. So you're selling the right to sell to somebody? Somebody has the right to sell to me? And the answer is, Is that confusing? They go, I go, fine, we'll just use calls for right now. We'll talk about puts though. But again, this isn't just about, okay, this isn't just about like, oh, sell this, do this, okay? It's about criteria. It's about specifics. It's about a recipe to be able to build a trade, okay? Now, before we go any further, we can do this, and we can do this in umpteen different products. And I like to exemplify positions I'm in, S&Ps and the ZBs and the spiders. And you can see I've got inventory. Inventory means, okay, I mean, I'm actually, cooking pretty good in here with some decent inventory. This isn't a big position by any stretch of the imagination. It's not a big position, okay? All I'm showing you is between this position, okay, the position I have in here. Again, I want you to understand, these are trades. These are active trades, okay? And all of these trades are following Ultima criteria. Now, right? 90% probability and the 10% hammer. Okay, before everybody runs out, and again, this is the point where I say, do not just run out and be like, okay, I'm ready. I'm going to sell some options. Okay, this is the part where I say, do not try this at home until you understand conceptually 90%. Those trades had actually the ones I just showed you had even a higher probability than that. That was more like a 95% probability. Okay, but 90% sounds great, but 10% of the time the market just rips your face off. When you trade high probability strategies and you're wrong, you're going to get hammered. What a lot of people do, okay, is they learn, the other one just filled. So hopefully you guys heard that one. But when I said the other one filled, here, okay, 2 orders, 2 filled. So filled for $1, filled for 96 cents. As I said, like there's no question you're going to fill. Just route the order efficiently, proficiently, like sit out, let the order rest out there in the book. It's fine. Okay. People are like, I got to get filled, man. What do you got to get filled? These are options that are 122 days out. Now, I bet you anything, if this doesn't fill today, it'll fill tomorrow. And if it doesn't fill tomorrow, it'll fill the next day. No one needs to get filled. You just want to get filled. So a lot of people learn about high probability trading, but when they first learn about high probability trading and they learn about options premium selling, you probably learn a trade called the iron condor. How many people have ever learned this in the iron condor? Anybody? All right. So some people actually learn this in the iron condor. What an iron condor is, only like a couple of people, a few of you, all of us. Iron condor, for those of you that have no idea what I'm talking about, an iron condor is very often, okay, thought of as a high probability trade. It can be. An iron condor means you can sell a way out of the money call, and you can sell a way out of the money put, way out here, okay? And then you buy a way out of the money call, and then you buy a further out of the money put, right? And the risk graph for the iron looks something like this. Well, wait, like, I can't do it right now, like that, okay? Because you make money so long as we don't move up huge or down huge. Therein lies a little bit of an issue. So the iron condor that you learn to do, and again, I like to bring this, okay, to everybody's attention, because if you've sold an iron condor, I'm just going to say this very pleasantly, it is nothing like Ultima trades, nothing like it, okay? The iron condor has absolutely no discernible edge in today's marketplace, full stop. The iron condor has no discernible edge in today's market. That basically means if you sold an iron condor, sell an iron condor, sell an iron condor, sell an iron condor, there's no edge long-term, okay? Just basically means this. Well, if you ever learned an iron condor, you probably went to some class, they charge you $500, you went through a 3-hour class and they teach you an iron condor. And when you go out and you learn the iron condor, you sell an iron condor, it has a 90% probability, you learn to do it. And initially you tested the trade out in a product called the spiders. So you sell that iron condor, you collect your dollar, and you go after the first month, because you did it for like a 1-month trade. After the first month, you go, holy crap, that trade actually worked. This is the greatest thing ever, okay? So like you're so shocked that it worked, the very next month, you do another iron condor, you do it in the spiders, but instead of doing 1 contract in the spiders, now you're doing 3 contracts in the spiders. So you step up, you do 3 contracts in the spiders. The second month you do the trade, it works. Now time out, you never thought this before, but of course it's gonna work. The trade has a 90% probability of success. Did you think it wasn't gonna work? Because you're so used to getting beaten up in new strategies that you try, you put on the iron condor, it's the first thing that actually did work. So the second month you do it again, it works too. So the first month you did 1 contract in the spiders. The second month you did 3 contracts in the spiders. The third month you trade the iron condor. You saw whoever taught the class, they didn't do the iron condor in the spiders, did they? No, they did the iron condor in the SPX. What is the SPX? The SPX is the mother of all products, also known as the widowmaker. The SPX is the beast. Now you go into the SPX, you do 1 contract in the SPX in the third month. Okay. By the way, the SPX is exactly 10 times the size of the spiders. It's a $4,500 product. It is the beast. You sell a way out of the money iron condor. What happens? You make $1. So by the end of the third month, you're like strutting your stuff and you're like, you know, you really think at this point, you know what you're doing because you're 3 months into this. You haven't had a losing trade. I mean, man, you haven't even been threatened. So in the 4th month, you step in, you do an iron condor in the spiders. And instead of doing 1 contract now you do what's termed a 10 lot. And that 10 lot, what is a 10 lot? A 10 lot in the SPX is the equivalency of doing 100 contracts in the spiders. So you back up the truck, you do your 10 lot, and the market's like, come on. As soon as you put that 10 lot on, bam, like a freight train just hit you. Not only did you lose on the 10 lot, but you lost everything you made on the previous 3 trades. You lost half your account, okay? And you're left just basically reeling like, did anybody get the license plate of the train that just hit me? Okay, it's absolutely brutal. Do you have any idea how many times I've watched this happen while sitting behind the screen at Thinkorswim? Okay, it's like watching this really, really bad movie and you're like, lady, don't go in there, okay? The guy has an axe, he's going to kill you, okay? And after you've seen it like 50 times, you're like, lady, don't do it, he's gonna kill you. You could write somebody an email and say like, hey, I see you're like 10 contract trade in the SPX. Lady, you're screwed, you just don't know it yet. No one listens, okay? No one listens till they get hit by the absolute freight train. By the way, if doing this explanation sounds familiar, and to some of you, you're like, how could he possibly know this? It's because I've been looking at your account for the previous 15 years. It's like I've been looking at your account. I have looked at your account for the past 15 years. We know exactly the progression of how people come up and sell options. They go out, they sell options, high probability, high probability, high probability, high probability. Some of you will make it to the 5th, the 6th, or even the 7th month before you actually get hit by the freight train. By the way, the longer you go without getting hit by the freight train, the worse it's going to be, because you actually have a belief at that point that you have an edge. You don't have an edge. You just have a high probability trade. We have to give you the edge. Okay. I'm going to tell you right now, you got to learn how to do this, and you got to learn how to do this the right way. By the way, the iron condor traders, does that sound familiar to any of you? Just kind of curious on that one. I don't want to make an example of anybody, but please, again, this is like the 12-step program for trading. So by all means, only like 1 or 2 people ever come out over there. All right. Calendar spreads don't work right now. They're absolutely dead. Butterflies are also kind of toast depending upon how you trade them. I like it. One person goes, yes, I have done this before. Every single time that you hear about an iron condor, you'll hear that disaster story. The worst thing going on right now is people are actually doing this in what they call 0-day expiration. You're dead. I'm telling you, nobody has informed you. Okay, put the toe tag on right now. Don't do it. All right, there's far too much risk. And I can tell you unequivocally, you will not survive, especially in a marketplace like this, trying to sell short duration options. Okay, they're just going to move too fast. Now, after people learn this iron condor and they learn this logic, they make money, make money, make money, make money, get hit by the train. Then they go back and they take another $500 class. And the next $500 class tells you can fix anything. Okay, I can fix it. I can put on one of these. I can put a butterfly to cover a leg. I can do a calendar. It gets good at this point. I can do this. I can do that. Fix is a very, very dirty word in this business, because people always believe like a fix. What is fix? Fix, okay, is taking more good money and throwing it right down the same exact rabbit hole, right? Fix is another word for get out a shovel and just dig yourself in. I am a very, very big cynic regarding good trades gone bad, because here's the bottom line about fixing a trade. Anytime you fix a trade, it's more risk and it's more transaction costs. You go, but it's free transaction costs. Me trade at Robinhood. It's free transaction costs. Sure, it's free. Nothing is ever free in this world. Ask Citadel. Anyway, anytime that you're fixing a trade, you're adding more risk. Just by the very notion of fixing a trade is throwing more good capital after bad. Yes, some fixes will work, but the very notion of fixing a trade, again, throws more money into an already losing position. What I'm getting at is you need to learn how to do this properly, okay? Fixing trades, iron condors, and so forth. Listen, it's the same exact analogy, like fixing a trade, any trade. It doesn't even have to be an iron condor, but selling premium exemplifies the people trying to fix a trade. Fixing a trade is the same analogy as take a car, drive it off a cliff, and then bring that car to a body shop. What are they going to tell you? They're going to tell you, thing's a total piece of garbage. What do you want me to do with this? And they go, I want you to fix this car like it was brand new. And they go, I got an idea for you. You can go beep, 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 beep. No, I mean, they're basically telling you the car is totaled. It's a loss, but nobody ever thinks that way. Nobody ever thinks that way, that it's a loss, it's totaled, okay? If the insurance company is saying it to you, it's true. It is a loss, it is a total, except in the options marketplace, what will you do? You'll just keep sinking more capital into an already crappy trade. Listen, you got to learn to do this correctly. You've got to learn position structure. Now we're going to give you a little bit of the full Monty over here, okay? When I say the full Monty, we're actually going to show you a position. What I want you guys to kind of envision at this point in time, let's say that the SPY is at, where is it? It's about 450, okay? I know it's not quite at 450, but let's say the spiders are at 450, okay? What we're going to do is we're going to go out, all right? Just for example, we're going to sell the 500 call. We're going to sell, okay, the 510 call. We're even going to sell 520 call, okay? I'm collecting $1 here, $1 there. Simultaneously, okay, we're going to go out and sell, in this case, a 360 put. We're going to sell probably a 340 put, and we're definitely going to be selling a 320 put. I just sold a bunch of stuff on either side of the marketplace. What could possibly go wrong? Think about it. What could go wrong here? I just want you to take this for what it's worth. Spiders are trading right at 450. I sell out of the money calls. Now I sell out of the money puts. You tell me what could go wrong. Anybody? Anybody? To make sure everybody understands conceptually what can go wrong over here. Because again, every time I ever go to anybody's different, seminars and stuff over there, they say, do this trade, we'll make some money. No, you're not. You do this trade like this, you're dead. Okay. And I have no problem saying this. Okay. You are dead if you do this trade this way, because it's only a matter of time. Forget about the upside. The upside is easy. You'd be like, oh man, we could rally up huge. Rallying up huge, you'd be like, woo! Like rallying isn't the problem, because like rallies take time and you're like, oh, bring it. Bring the pain. Come on, bring it. Like when the market's rallying from 450 to 500, you got like all the time in the world. You're like, here it comes. Here it comes. Okay. I mean, you're like standing there. It's like, the slow train to the upside. The market's not just going to one day go from 450 to 500. It's the S&Ps. Okay. That's kind of a big move, like a 10% move. You might see that one coming. The upside doesn't really scare me, but we can reduce risk there. Okay. What I want to reference here is the beast. Okay. What is the beast? The beast is when we move. One day you're going to wake up, you're going to go from 450 and you're going to be like, oh, okay, what's coming for you? The beast is coming for you. The market, you wake up into an absolute proverbial storm of risk. Okay, call it whatever you want. But as soon as the market goes down, what's going to happen to volatility? You tell me, right? For those of you that are aware of this, when the market goes down, volatility goes where? Up, soaring. Sooner or later, okay, it's only going to take one day. We're going to come down, and we're going to come down hard, and it is going to blow up all the positions down here. You're like, ah, okay. You have to reduce risk. You got to have position structure. There's no way, not even a little portion of me that wants you to learn to sell options completely naked. It's not smart. Okay. What we are going to learn to do right now, right here, proper position structure. Again, proper position structure. How do we do that? Enter the hedges. Okay, what are the hedges? Enter the hedges. There are actually, whoops, okay, fix that. I'm writing and seeing it at different times here. There are 3 hedges that we can use to help reduce risk. The primary hedges. The first one is what we call an RTS, better known, okay, as risk twist spread. The next one is called a VVS, better known as a VIX vol spread. Okay. The last one is what we term gamma iron. Okay. These 3 are definitive hedges. Those hedges make it possible, okay, for you to be able to sell options premium and at the same time be hedged, to sell options premium at the same time, to have a risk mitigation tactic that's already there. Because I'm going to tell you something right now about the marketplace. Those that try to sell options and sell options like I was showing you a moment ago, you will never survive the onslaught of volatility. You will never be able to react faster than the marketplace, ever. Okay. One day you will wake up into an absolute proverbial crap storm of volatility. These hedges, people ask all the time, when are they on? They're always on. How are they always on? Okay. What are they going to cost? Negligible. In fact, the VIX volatility spread is often done for 0 upfront. Okay. Are there cost hedges? Listen, hedges are a sacrificial lamb. When I say it's a sacrificial lamb, like literally, it's like every couple of weeks you go, well, let's throw the lamb into the volcano. Okay. We had to do it. Why did we have to throw the lamb into the volcano? Because it was the right thing to do to keep the option gods happy in case we crash. You're going to have to use, okay, some type of a sacrificial lamb trade. Is it okay? okay, to have a little expense, to have a lot of premium brought in. Of course it is. But most people, they don't want to focus on this. All they want to focus on, let's just make money, make money, make money, make money. But you have to have that risk reduction in your back pocket, because if you don't, okay, you got to be able to pull out the get out of jail free card when the proverbial crap hits the fan in this business. And if you don't have it, okay, you're going to always wish that you did. Anyone here that has experience knows just this. I mean, I told you from the get-go today, Ultima premium selling, okay, is an entire genre of trade. Ultima is not just about selling options 100 days out. It's not just about selling skew and implied volatility, okay? It's about the right to know how to hedge and how to hedge a preemptive move. Let me actually show you exactly what this looks like. So here we have the SPY. And we'll say again, the SPY is trading right at 450. We will go out, okay? And we will sell, for instance, the 500 call, and we'll collect $1. And we will sell, okay, the 510 calls and probably collect $1, and even go further out in time, possibly even sell, okay, the 520s and still collect $1, just dependent upon, I'm just rounding it, okay? At the same time, we're going to go out, for instance, and sell 360 puts. Guess what? The 360 puts could be trading as for much as $2. You're like, why are they double? It's called skew, people, right? We could sell, right, the 340 puts even further out in time, okay? Maybe we collect like $1.30 on these. We sell further out. What I'm doing out here, okay, sell, for instance, 320 puts. We'll even sell, for instance, the 300 puts. I am far out of the money. That is the inventory. This and what I'm teaching you is an inventory management business, okay? All we want to do is get out there, sell some option premium, okay? Reduce risk and just rinse, repeat, and just keep the inventory moving forward, right? There's nothing big. We're not trading anything huge, because any huge position could take a huge loss. You want to be the Amazon of the premium selling business. Just play hot potato and have good edge. What's the edge in here? Selling the premium, preemptive risk management is already in place. When I say preemptive risk management, let's talk about that. So I go out here. These trades that I'm doing all the way up here and all the way down here, okay, they have over a 90% probability of success. Okay, so like over 95% of the time, what am I doing? Absolutely nothing. It's like flying an aircraft. You're sitting back and you're like, nothing ever happens. Nothing ever happens. 5% of the time, you're like, oh, you know, and you're like, control, control. Think about that. You already have the hedges in play. Let me show you what's going to happen in this marketplace. Okay, I'll show you exactly what's going to happen in the marketplace. So you go out and you put on all of these positions, right? And you've gone out and you've sold calls here, 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 and you've sold puts here, 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 and here. All of a sudden, the market sells off fast. Okay, it's a good thing that somewhere laid right into here, you have what's a VVS, which stands for VIX volatility spread. What is a VIX volatility spread? Well, you know this, what the VIX is. When the market goes down, the VIX goes where? Up. Okay, when the market goes down, the VIX goes up. That little VIX volatility spread. The first real violent move to the downside comes to the S&Ps. As it comes to the S&Ps, the VIX volatility spread lights up, okay, and causes a little bit of an umbrella of risk. Are you still going to take some losses? Absolutely, unequivocally, okay? You like, oh, that one hurt a little bit. You're still in business. You're still alive. You're still selling premium. Inventory management, hey, listen, sooner or later, you're always going to have little chunks of your inventory go bad. But that VIX volatility spread right here, this VIX vol spread, this thing ignited. And the moment it took off, it actually covered with an umbrella of risk over many of the out of the money puts. Okay. At that point, you have a decision to make. You just bail out, get out, move on. Okay. But let's actually look at the other side of this. What happens if we rally up huge? We use a gamma iron. What does the gamma iron do? Gamma iron is actually a really interesting trade. It's a buy-side iron condor. If the market blows to the upside, it actually gives you profitability to the upside before you could ever hit the loss. It's what we term an inside hedge. Okay, it's inside hedge because if the market makes a fast move to the upside, the first move is a profitable one for you. Okay. You have to be able to take a profit before you could ever take a loss on these particular trades. People, this is what selling options premium is about. Do not let this stuff intimidate you. The first time people see this, they're like, there's so much going on the screen. Hey, you know what? It's all for nothing. Okay. The bottom line is this. Here's your marketplace. Trading at 450. We sell a bunch out of the money junk here. We sell a bunch out of the money junk here. If we come down quickly, we have a hedge. It gives you an umbrella. If we come up quickly, we have a hedge. Okay, that's it. That is, in simple terms, what you want to learn to do in this marketplace. Selling options, okay, is easy. Selling options, okay, is the edge right now. That's where it's at. The hedges, though, are the necessity. The hedges are the evil necessity. You need to sacrifice the lamb to the volcano right now to not anger the option gods. Listen, this is why you want to sell premium. Premium can now be sold in a small account, actually $2,000 in the account. And this is where people always say, the margin, just the margin, okay? Right? What margin? Because you can circumnavigate margin. That's one I always like to torture everybody about, but you can circumnavigate all the margin, the day trading margin requirements, the restrictions. This produces positive theta decay, may enhance existing positions. You realize that you could sell premium against your 401k. Don't think about this strategy in its autonomy. Maybe you have a 401k, okay? You could sell boatloads of options. You go, I can't touch my 401k. I didn't say you had to touch your 401k. If you know what's in your 401k, couldn't you use this technique in an IRA against your 401k? It's tax deferred account against tax deferred account. And if you don't have an IRA and you have a 401k, couldn't you just sell premium in a regular taxable account? Why wouldn't you? You see, having a 401k means you have a bullish bias. If you have a bullish bias, for the most part, most 401ks have a bullish bias, not all of them, most of them have a bullish bias. If you have a bullish bias, why wouldn't you sell boatloads of out of the money options against it? Like this giant out of the money covered call. It's not like you're taking any more risk. You already have risk. You have the 401k. People have $250,000 tied up in a 401k. What are they doing against it? Nothing. What have they watched so far this year? Well, if you're in the S&P 500 or a Vanguard 500, you're down right now approximately what, 7% year-to-date basis. Every trade I'm talking about here produces a very high probability. You never need to buy or sell the stock. And you could be wrong about market direction and still produce profitable trades. And I stress this, you need this in your life. And I'll tell you exactly why you need this in your life. It goes back to that phrase I used earlier. Don't fight the Fed. I don't want to use that as a statement. Like, I don't want to use the statement, don't fight the Fed, okay? Like, to scare anybody. But at this point in time, right now, rates are going up. Okay, geopolitical risks, it's an absolute cluster out there every single day. Every single day, it's 50 points up, 50 points down in the S&Ps. If you don't know what you're doing right now, okay, you're going to be sick. All we're doing is going out and selling premium and go, hey, look, the market moved. It was up big. It was down huge. Okay, you go and talk to people about the marketplace, like, oh, did you see the Dow was down almost 1,000 points the other day? You go, it was awesome, because the Dow down 1,000 points implies that you're probably selling options premium into heavier amounts of implied volatility, which is just gold, Jerry, gold. I'm telling you, you need this in your life because you don't want to fight the Fed. Nobody uses the terminology right now. Nobody uses it. Think about that. All of a sudden, for the last 10, 12 years, people are like, don't fight the Fed. Be bullish. Don't fight Fed. Okay. Well, guess what? You're still bullish. Are you fighting the Fed? You go, oh, yeah, I never thought of it that way. Okay. You're on the wrong side of the Fed, because the Fed right now, it's quantitative tightening. Interest rates are going up. It's inflation. It's scary right now. Listen, selling premium could potentially bring in consistent returns, okay, while minimizing your risk. If you want to learn how to do this, I'm actually going to discuss criteria here momentarily. Before I get to criteria, I'm going to show you a few live trading examples, right? All of these, they're not examples. These are trade alerts, okay? These are alerts that we've actually sent to our clientele here at Theotrade. Variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account, and can be done inside of retirement accounts. By the way, a retirement account, you do have to have $5,000, okay? That is not my rule. That is actually SEC FINRA regulation. Same with the $2,000, okay? But again, you can do this in a retirement account. Again, This is live premium selling trade alerts. When I say trade alerts, this is stuff that we send out to people. Now I want to show you exactly what you're looking at here. What you're looking at on the screen happens to be a Tesla short call. By the way, I just wanted to give you a quick example. You'll notice, you're like, that's over a year ago. Yeah, what I decided to do today is I'm going to show you all of 2021, okay? Ultima. When I say all of 21 Ultima, this is a premium selling portfolio, okay? Every trade, every single trade that I'm showing you has been fully documented from open to close. Every single trade has also been shot out, okay, to thousands of clientele. So they get to see everything that we're effectively doing. So these trade alerts, let me just show you what they look like. And I'm just using Tesla as an explanation over here. This is the exact time and date of the entry of the trade, the exact time and date of the closing of the trade. Okay. This is to open to close. It's Tesla, the exact expiration cycle, the strike that I traded. It's a call. It's a call. This is the opening price, the closing price, opening price, closing price. That's the return on the strategy. Everybody comfortable? If you look at this, okay, where does this come from? And the answer to that is, okay, these are screenshots specifically from my account statement here in Thinkorswim. If you take a look, what am I looking at? Well, right here, I just happen to have the spiders, and this is the last 30 days, okay? All I did is I took this and tried to clean it up. Like, look, to close, to open, to close, to open, to close. I took this exact screenshot. This is my trade history. I've had 14 fills in the last 30 days, right? I took this and I took the screenshot and I put it into, okay, right here, which is just a PowerPoint presentation. And I did that only because it's kind of hard to go through every single trade. By the way, we are complete. As I said, as I started this today, no holds barred. We show everything, every P, every L, that means profit, every loss, every opening position, every closing position, every hedging position. I'm going to go through all of 2021. There's a lot of trades. I'm on slide 35. I'm going to be on slide about 135 in about 5 minutes from now. I'm just going to scroll through them. Here is the opening and closing of a Tesla short call. This, okay, is Ultima. Bond short put. Now, time out. What I trade might differ from what you trade. I like to trade bonds, okay? Look, I have some bond positions on right now. They're not going very well, but I have good hope for them. I have bond positions. I like to trade bonds. Doesn't mean you have to trade bonds, but bonds, okay? You know, again, it's what you're comfortable with, right? So here's a bond short put, 57% return. Another bond short put, 53% return. IWM short call, 62%. IWM short call, 53%. Tesla short call, 76%. SPY short put, 60%. SPY short puts, 50%. SPY short put, 51%, 57%, 49%, 50%. QQQ short call, 62%. QQQ short call, 53%. QQQ, 50%. There we go, 64%, 53%, 57%. There's an IWM short call, 56%. Timeout. At this point, you're probably bored out of your mind, and I'm less than 30 seconds into this. Why are you bored out of your mind? So far, I've traded the bonds, I've traded IWM, the QQQ, I've traded spiders, okay? Forget about the Tesla thing in there. You don't even need to do that. I like to play with fire once in a while. I just need to get it out of my system, okay? The reality is IWM, SPY, QQQ, IWM, SPY, QQQ. Let's actually run through this even faster. So we're into March now, 50%, 54%, IWM, 19% loss. Oh, but still my heart. It happens, people. Okay, IWM 54%, 52%, 49%, 47%, 49%, 51%, bond short call 50%, 54%, 51%. Okay, we're still in March here, 53%. Okay, I'm just running through every single trade because I want to show you a track record, 73%, which is actually, this is technically outside the scope. This must have been a huge move inside of bonds in a short period of time. That's outside of the scope of what I should have returned, 59%, 56%, 52%, 50%, 51%. Mo short put, that's a little different, 53%. Bond short put, Tesla short call, 54%. Amazon short call, 63%, 50%, 53%, 51%, 50%, 55%, 50%. By the way, are you getting sick of 50% yet? Because that's pretty much the target I'm trying to hit. 51%, SPY short put 52%, ES short put, timeout. At this point in the Ultima portfolio, what I was trying to do of 2021, Ultima, okay, I was trying to get everybody comfortable in these alerts that we send out. As we're sending out alerts, okay, when I say I'm trying to get everybody comfortable, I'm trying to get them comfortable with premium selling techniques. At this point in the year, we're about 4 or 5 months into the year, and I decided to switch to the ES. Why the ES? For those of you that do not know, the ES is the options on futures contracts. The options on futures contracts are precisely the same as the spiders, except they're 5 times the size. So what I did is after proof of concept, and again, we've been running this portfolio for a while, but after proof of concept to clientele, we actually progressed them into bigger products, which is the S&P options on futures, which I'm very comfortable with. So now you're getting a 50% return, but it's 5 times the size. So when you're like, oh, $13 back for $6.50, it's 50% return. But this is when people look at, they go, I'm only going to collect $1. Who cares whether you collect $1 or not? You're making 50%. It could be 50% on $1,000, which is $500, or it could be 50% in a $10,000 trade, which is $5,000. Okay, it's just all a matter of allocation at that point. So ES now is the primary product. So what I'm doing is now I'm trading ES. Here's the QQQ again. ES, 56% bond, SPY, okay, short call. Now we're actually all the way into summer over here. 31%, okay, Christmas tree. Timeout! At this point, once again, what I try to do throughout the course of time is introduce, first of all, a trade like the ES that had a little bit more size. Now I'm introducing a trade that had a little bit more complexity. A Christmas tree trade is a big beast. This one's supposed to have a much higher return, but take a look at the credit received. The credit received here was $21. I closed it for a $3 debit. So imagine you opened something, I should say, for roughly $21 and closed it for a $3 debit. That is big boy profitability. The cool thing about a Christmas tree trade, let me tell you the coolest thing about a Christmas tree trade, you trade less. You trade less. What do you mean you trade less? You don't have to put on nearly as many positions because the Christmas tree has a hedging component as well as a profitability component, 85% return. QQQ short call, TLT, this is actually bonds. ES 55, 19%, 57%, 50%, 54%, 50%, 52%, 49%, 58%, 63%, another Christmas tree trade for a 92% return. That is a big monkey. Yes, 52%, 52%, 53%. Okay, no time, no problem. Each and every trade shown was displayed live at Theotrade. It's actually blasted out to you in real time. Again, all I just did, okay, in the last 4 or 5 minutes is went through pretty much the history of the portfolio. And as I got deeper into it, again, a little degree of complexity, a little bit more size, okay, but the trades basically are identical. Again, all the trade results are perfect for part-timers. We send this stuff out to you. We text it out to you, or we do push notification. Selling premium is totally hands-off, and it uses set and forget order types. When I talk about set and forget, that's GTC. What was the most common? What was the most common percentage return in the entire portfolio throughout the course of the year? It's pretty easy. Okay. By the way, I like what somebody just said. They said, the trouble with this, I can't afford to sell naked. As I said, the margin, if you're thinking right now that margin is issue, if you have a $2,000 account, I guarantee you can do this. Okay. I guarantee you can do it. You're just doing it in the wrong product, right? I guarantee everybody can do this. I will show you in just a glance, Forget about everything else I have on. Forget about everything I have on in here. See this MES? This is a monstrous position. It's a 1 by 1 by 5 by 4 by 3 by 1 by 1. That ties up less than $9,000. That's an IRA. That is an IRA. Ties up. You're like, oh, I don't even have 9,000. Really? Did you need to do? Okay. Almost what? There's 1. Okay. There's 4, 8. Okay. There's for 13. There are 14 naked short contracts in there. 14 naked short contracts. $9,000 in an IRA. If that's a regular Reg T margin account, okay, that's $4,300 a margin in the Reg T margin account. Don't ever tell me that you don't have the margin for it, because things have changed in this business. Rules have changed in the last 3 years. Most of your brokerage firms will never talk about it. They don't sit there and go, hey, you should trade this because it gives you more margin freedom, freedom. They don't tell you that. Again, A fraction of your time is enough. I don't want anybody to think they have to be glued to their screen to be able to sell premium. You have the hedges in place because we all know, no matter how much we watch the screen, you know that one day you're going to wake up like today. Today you woke up and the S&Ps were up 70 points this morning. At least when I woke up, they were up 70. By the time the market opened, they were only up about 40 or 50, but they were up huge. One day you're going to wake up, market's going to be tanking. It's not going to matter if you watched all day or not. You got to have that hedge on. Okay. You're not going to sit there and watch the screen all day. What a better time. Okay. You got to learn a skill set that's going to last your lifetime. There's one thing I can say without unequivocation: volatility is here. Volatility is going to be here, and it's going to be here for a long time. Doesn't matter whether we go higher. Who cares? Let's say the S&P's hit an all-time high. We think it's still not going to be volatile with the Fed breathing down your back. Oh, Jerome Powell's not going anywhere. Okay. They're not going to change their stance. Fighting inflation, okay, is job number one. All right. Listen, if you're still working, do this very part-time. This is how to emerge, though, from the pandemic stronger and greater financial shape. You have to look at this. Okay. The volatility is a blessing in disguise, right? What our members are saying. Kevin Burks, I absolutely love this freaking website. This one's a little older, September 28th. There's so much here, so many different flavors. I cannot pull away for more than 15 minutes. I can't get any work done. Probably shouldn't show that. This one comes February 10th. I wanted to grab some recent stuff. This is from our chat room. Bought 4 contracts for 296, closed out 4 earlier for 657. Okay, I could have waited, but this bit me in the past. Okay, and others in the chat room, this is an example of why Theotrade membership pays for itself. Roughly $3.50 profit times 4 contracts times 100 shares. Okay, it's $1,400 profit. Paul, okay, Jim, agreed. Okay, I think there are many people here that make the cost of Theotrade annual membership nearly every trading day. That's like a 251 return on investment. Kevin, okay, Theotrade is the best by far. Okay, I'll be with them for the rest of my trading career, no questions asked. By the way, those are unsolicited. That's from a couple of trades that we were taking off profitably, specifically on February 10th. Characteristics of selling Ultima Premium. Listen, the attributes of selling premium, they're undeniable, right? You never have to buy or sell the stock. Risk is precisely dialed into your comfort level. You never need to use a stop order. By the way, we do not use stop orders here when selling premium, period. That is a blanket statement. There's no stop orders. They will not work in the midst of heavy volatility. You can vary time frames to minimize risks. The probability of profitability is incredibly high. Most of the time with these types of trades on, you're not sitting there monitoring its every move. Okay, it's the perfect strategy to enhance one stock portfolio, like I talked about with a 401k or an IRA. It's an excellent tool, though, if you're also seeking a returns to build a smaller account. But new products allow for the sale of options in any account size, and I constantly stress that. Okay. By the way, you do not need $25,000. You're not asking the right questions. It's $2,000 in a regulation T margin account, $5,000 in an IRA account. Because most people, again, they're not familiar. Any account size over $2,000, and you can actually sell options premium. All right. Building a portfolio of options. Do not let the options portion of this intimidate you. And I always say that because I know, we have a lot of people on right now, but I always know that there's newer people here that have never had any options experience. And they see like, I'm selling here and I'm selling here and I'm buying this. And they go, oh, this is going to be work. You're going to have to spend a couple hours at it. There's no question about it. There is a learning curve to get through. Then you got to get used to, for instance, clicking on a platform, whether it's Tastyworks, whether it's Thinkorswim, whether it's Interactive Brokers, whether it's Robinhood. You're going to have to get used to whatever technology that you're trading on. Okay. You got to get used to kind of interface to the marketplace. There's no question. But you have to also understand this. Okay, it's a skill set that you're going to need for the foreseeable future. This is not going to be a stock picker's market. There's no software that's going to see geopolitical risk, is there? Okay, is a MACD, a Fibonacci, and a Bollinger Band going to tell you what the Fed is going to do? Of course not. The entire marketplace right now, okay, is on just like literally a knife's edge. That's what we're trading on every day. But you got to understand the sale of premium, it erases all that. It just mitigates risk. We go out, we sell premium, start to manage some inventory. However, the sale of premium is akin to a massive power saw. I use the same analogy for years. You want to learn this business, but you got to understand that learning to trade options, okay, options are the power tools of the stock market. If you wanted to build a house, the quickest way to do so is going to be using a power saw, right? It's going to be clean. It's going to be quick. It's going to what? It's going to rip through whatever wood you want to cut it. But if you don't know how to use a power saw, you're going to lop off a couple of fingers. Options can be the exact same thing. Options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in the market. But if you don't know how to utilize options correctly, you can lop off a couple of fingers. And yet I'd like to bring that to fruition. Okay, that's what we do here. You can sell premium, okay, and you can minimize risk. Again, maybe you don't have that options experience, maybe limited experience. Don't let that, again, portion of it intimidate you, right? Give us a couple hours because you're going to need these strategies for the foreseeable future, okay? We can show you how, we can show you when to sell premium in a matter of a few hours. What we do here is we create detailed recipes for each strategy, including selling Ultima Premium. I mean, you wouldn't go out, you wouldn't bake a cake. If like you've never baked a cake before, you wouldn't just be like, hey, I think I'm going to bake a cake. You're probably going to look online and try to find a recipe, okay? You wouldn't bake a cake without a recipe, so why do you trade without one? I'm telling you right now, you need to be prepared for this marketplace. Don't be intimidated by volatility. Just embrace the volatility, okay? This is what you need, okay, to sell Ultima Premium for a living. Just to give you an idea, right? What underlying stocks or indices make the best Ultima Premium selling candidates? What did make the good candidates? You're like IWM, QQQ, spiders. What else did I have? A little Tesla in there. A little S&P options and futures, some bonds. There was a Mo. People, that was it. Okay, that's the full Monty. Like you think this is a stock picker's paradise? I'm not a stock picker. I've never been a stock picker. You know, when I traded right out of college in Chicago, I traded predominantly one product. I learned in Yahoo, but we predominantly in the group that I traded in, we traded the S&Ps. That's it. I'm an index guy. I've always been an index guy. I like the indices. Why? Because you don't have to worry about like a CEO getting taken away in handcuffs. You're like, oh, Twitter, Dorsey screwed me. Listen, Dorsey's gone. Finally. Okay. I mean, listen, you don't have to push all that aside. Make this business easier for yourself. Just sell some premium, do it in the major indices, get back, get hedged. Next, you got to know what volatility should I seek out. One of the most interesting things about selling premium, okay? Too small a volatility, not good. Too much volatility, really not good. That's why when I was kind of cracking jokes earlier about GameStop or AMC, they're a death trap. The volatility is too high. Actually, retail traders don't really know this, but you lose edge once the volatility gets above X. Okay, you have no chance of profitability in high impact, high volatility products. And again, most people, they don't tell you that, they don't sit there, but you have to have the right volatility, right? So you got to find the right product and then the right volatility. Sometimes certain products come into play and out of play. Like Tesla is a perfect example. Most of the time, I wouldn't touch Tesla, okay? But several times a year, it's perfect. There's a lot of liquidity in there. The volatility is not too extreme. Next, we go, what options expiration do I select? Have you guys looked at option chains lately? Okay, have you looked at option chains lately? Look at, this is the spiders. 1 day, 3 day, 7 day, 8 day, 10 day, set, hike. I mean, it's crazy. Look at all the option expirations, right? 58 day, 94 day, okay, 122 day, 135 day, 150 day. How many options are on those options? Do you guys know this? They're now listing in the next 2 months, they're going to list daily options. In the SPX, it starts actually late second quarter of this year. They're going to have a Monday, Tuesday, Wednesday, Thursday, Friday expiration. It's a party, okay? So they're going to have expirations every single day. You need to dial in precisely the right expiration. I showed you stuff 3 months out, okay? Is there actually an absolute optimized spot? And the answer is you better believe it. That's precisely what Ultima is about. What should be the delta of the option I sell? So you delta, the rate of change of the option for every dollar move in the stock. No. We're going to use delta in terms of probability. We're going to dial in the right delta to sell. Then we're going to dial in the right delta to buy. Okay, because you've got to sell one option, and you've actually got to create the hedge, right? What options do I buy against my positions? How do I build my position? Structurally, how many options do I sell versus how many options do I buy? Do I need a large amount of capital in my account to do this? No. Okay, I keep stressing that. Okay. Do not do this. All right. Do not do this thinking you need to have a large amount of capital. We're going to have small amounts of capital, initially small risk. Everybody has to get their feet under them. I don't care whether you have a $2,000 account or a $2 million account. I was looking earlier today, I have $1.4 million right now running in both options and futures positions. That's it. Okay. And I'm running that between a total of 4 accounts. So I have, again, this is like no holds barred in here, right? So when I say I'm running in 4 accounts, this is a portfolio margin account. Here's an IRA. Okay. Then I come over here, right? Multitude of accounts in here as well. All of it. It's the full Monty. There's nothing that we will not show you here between profit, loss, balances, everything. What is the right amount of risk for you? We can actually dial in. Like if you say I have a $20,000 account, we can help you dial in the right amount of risk for the account size, specific to the account size, right? What are the percentage returns supposed to be? I'll tell you right now, it's about 50%. How do I protect myself from market crashes? That is the sacrificial lamb trade. That's when we go out and learn to do a VIX volatility spread. In a moment here, we're also going to talk about, okay, the inflection point spread, okay, or an IPS. It's an inflection point spread. It's a new inside hedge. Let me show you exactly what we do here at Theotrade. Theotrade creates recipes in trading, okay? And when I say recipes in trading, listen, trading is all about answering the what if, okay? What I mean, what might be a good stock or ETF candidate, okay? For you to sell premium, what's the correct options expiration cycle? How much capital do I commit to generating premium? What options do I sell? What options do I buy? How can I limit my risk? Okay, Theotrade has those answers. Okay, we build recipes with definitive criteria. They are literally, they're checklists for each strategy and each unique variable that you're going to encounter. When I talk about checklists, the whole logic of what we built here at Theotrade, we took what we knew from Thinkorswim and TD Ameritrade. We watched client order flow for 15 years. Okay. And we built an entire pre-flight checklist. When I say pre-flight, the whole logic of the checklist is just like an airline pilot, right? The pilot does not get into a 737, throttle up and take off. They go through very finite checklists. We built, okay, a very similar checklist, going through the right candidate, the right probability, the right expiration cycle, every variable, everything all the way down. How do I execute this trade? You know what execution means? Okay, about 20 minutes ago, you saw me send trades. When I sent off that trade, did I get a good fill? Of course I did. Okay, why? Because I was patient, because I knew how to actually work the order people. Once you've actually gotten into a trade, that's where the checklist really starts, because once you get into the trade, now you're up and you're in the trade. What if the market goes up? What if the market goes down? What if the market crashes? What if we rally huge? How about we have actually a flow chart? We go up, we go down, we stay flat. Okay, all the different variables and unique aspects that you can encounter in the marketplace are covered inside of the criteria. Theotrade built answers to those questions. We'll give you the right probability to trade. How many contracts? Okay. What do you do to close the premium sale? What if we sell off big? What do you bail out of the trade? What if we rally massive? If we cannot fix losing positions, we get into the how, the when, the why, at what price. And I'm telling you, that's just the beginning of the variables you're going to face while selling Ultima options for a living. You can read, okay, all about what selling premium and selling Ultima is. You might even know how to build a few trades. Like I always throw this up here because I realize that people that are watching this, they're like, I'm going to go Google this. I'm going to go Google this. Go Google it right now. Go Google selling premium. 10,000 different pages are going to come up. Literally 10,000 Google pages are going to come up and they're going to say, you can sell premium, sell premium. None of it is going to cover what? Okay. None of it's going to cover what you need. You need Theotrade's recipe for success. You need the criteria. That is what we do here. Anybody could have figured out, I should sell premium. They just don't know what premium to sell. They don't know how many contracts to do. They don't know to go out 100 some odd days. They don't know which delta to use. They don't know how to build a VIX volatility spread to mitigate downside risk. Okay. That is what Theotrade provides. We provide a recipe for success. 20 plus year trading experience. By the way, that's just me. Here at Theotrade, this is not just the Don Kaufman show. We have 7 other full-time instructors, which I'll introduce here momentarily. I specifically, okay, ran the education group at both Thinkorswim and TD Ameritrade. I had access to the client order flow for over 15 years. That's just me. That doesn't include many of the other instructors that come from the hedge fund and or Thinkorswim TD Ameritrade background. We have viewed and studied million accounts, okay? Millions of accounts. Ran education, again, 15 years, okay? With the largest option order flow in the entire industry. Criteria is the recipe for success. The following strategy, which is selling Ultima Premium, okay, requires the utmost attention to detail. This criteria, we literally spent years fine-tuning the criteria, the trade setup. When you approach the section on criteria, you follow the steps to be able to build a trade. We built a full 5-hour course to walk you through every aspect of selling Ultima Income Generator, okay? Before I even go any further, I'm going to tell you right now, we don't sell a class here for $500 because usually when I show this, people go, "Ah, I knew something was coming here." Okay. I'm going to tell you right now, I will explain what we do here at Theotrade, okay, and what, okay, you need to do to view the Ultima Income Generator course. So this class, first of all, is not $500. Obviously, we incentivize people to be involved in Theotrade. I'll explain that here in a moment. There is a 5-hour course. It is archived. It is available immediately. We like to record the classes, clean them up, okay, and then have them ready to stream, okay, ultimately at your own convenience, 24/7 access. You also have the availability to download our courses, okay, onto any tablet, okay, and or mobile device. So you can download the entire 5-hour course for iOS and or Android. There's also a class slide deck that comes in PDF format, right? You don't have to print it out. You can just download this class slide deck and have it as a reference anytime you want. That is available immediately for download. Now, before I go any further, okay, the Ultima Income Generator course covers literally everything I just covered today. The sale of premium, okay? I'm going to go through the course curriculum here in a moment. The sale of premium, the hedges, everything, the risk management side of it. Before I go any further, though, I also want to elaborate upon this. At Theotrade, we don't just build a course, let you view it for $500, and then just give you a pat and say, go for it, okay? Theotrade, listen, I watched from behind kind of the brokerage doors every other education firm for like 15 years, okay? I started with Thinkorswim in 2001. And imagine like how much you got to see all the other education firms along the way. And everything out there, people selling courses for $3,000, $18,000. What we do here at Theotrade is all encompassing. We will provide you every nuance to support your learning curve, not only through Ultima, okay, but we will actually send you the trades. It's part of this, okay? We will provide you support via email. It's part of this. We will provide you every nuance that you will need to get you ramped up from absolute novice to some of the most extreme traders. We will hold your hands, okay, and get you into and learning how to execute these particular positions. The reason I mention this is because I think that everybody in this industry is so used to the idea of somebody goes out, they sell a class for $500, then you have to buy an indicator for $500, and before you know it, you got to take a class for $500 to learn how to use the indicator for $500 for the original class for $500. But don't worry, that's obsolete. We have another class for $500. Okay. We do things vastly different. Bear with me here for just a moment. I'm going to show you, okay, everything that we offer ultimately at Theotrade, everything that's included with Theotrade, and understand, okay, anything you need in this business to trade, to invest, okay, from classes to coaching to email support, we actually provide that to you, right? This and what we provide here, you could go out, you could spend $50,000 on a market education, and this will absolutely blow it away. Now, here's actually the Ultima Income Generator course curriculum, okay? This is what you're actually going to learn over that 5-hour course. how to build a portfolio of high probability trades that generates consistent monthly returns regardless of your starting capital or experience. You're going to get the detailed entry and exit criteria for selling options premium while keeping risk at a minimum. You're going to discover a little bit about option Greeks and learn how to actually manage positions through one easy number. Then you're going to learn to use a risk array, which is, to me, it's probably the best portion of that entire class. You're going to actually be able to visualize profit and loss before the markets ever move. You're never going to be surprised as to what your P&L is, how to properly allocate in a way that actually reduces risk, okay, in your portfolio and keeps things much more hands off. So allocation is a critical component actually of selling premium. You're going to discover risk mitigation techniques designed to hedge even some of the most extreme market environments. So you're not going to get caught off guard by a massive move. And I've been talking about that literally for the last hour is, hey, sooner or later, you're going to wake up, the market's going to be an absolute cluster, and you're actually going to have your risk mitigation technique on, right? How to sell premium in small accounts and or a retirement account with an innovative new trading vehicles that have never been available before. That is what we are going to cover, okay, during the course, again, of a 5-hour class. Again, it's all part of Theotrade. In addition to it, after going through this class, we'll start to send you trade alerts. Okay, we're not just going to leave you like hanging out there. And again, this is not take a class, pat on the butt, and go out the door and be like, I'm ready to trade. We're actually going to give you the Theo Theta portfolio, which we'll discuss here in a moment. In addition to the Ultima Income Generator course, there's a new class coming. The class is coming Tuesday, March 1st. I will be the instructor. This is the first class I've actually done in quite some time. Again, we have 7 other instructors and we rotate through classes. This is a big one. The inflection point spread, okay, is like literally, it is Ultima part 2. It's actually, as I said earlier, like it's taking it up a notch. So between now and March 1st, I ask one thing of you: watch the Ultima class, because now we're actually going to step into a new genre of Ultima trades. It is a 3-hour course. It is literally, okay, like part 2, if you would, of Ultima, okay? And for those of you, again, after you go through part 1, you're gonna like, this class is unbelievable. Wait for part 2, because I'm gonna take this to entirely new levels. The 3-hour course is gonna be archived immediately following the live presentation. It's 24 access. You have download capability on iOS or Android. The slide deck that goes, okay, with inflection point spreads is, okay, an Ultima generation course curriculum. It is a strategy unto Ultima. It uses Ultima logic. As I said, Ultima is a whole genre of trade. Inflection point spreads, okay, tacks on to the genre of trade. It actually places the hedge and the premium sale in one transaction. Okay, that class slide deck, it'll be available on March 1st. Here is actually the course curriculum. You're going to learn to sell premium and hedge risk in one transaction. So you're not going to have to go out and sell here, sell here, sell here, sell here. Okay, you're going to learn to put on the whole position like that at once. You're going to create high probability positions that generate monthly returns regardless of account size. Discover how to hedge existing positions, even in the most extreme environments. Okay, so now we're actually going to teach you how to hedge when the market's getting slammed at the same time. In case you're ever caught off guard, you need a hedge, you're going to learn to do it on the fly. You're going to get the detailed criteria for inflection point spreads while keeping risk at a minimum. Learn, okay, to analyze the inflection point spreads so you're never going to be caught off guard. That's a huge one. Inflection point spreads, okay? There's a reason we call them inflection point, okay? And find how inflection point spreads, or what we call IPS spreads, okay, can safely allocate for any account size. Before I go any further, okay, you will be given access to this class. You'll also be given a money back guarantee at any point, okay? Enroll for Theotrade right now. If you're not satisfied in the next 90 days, just go to support@theotrade.com, receive a full refund. I'm just throwing this out here right now, simply because when you enroll for Theotrade, it's 90 days, okay? It's 90 days. I just tell everybody that. You get access for initially 90 days, and I'll show you the exact cost, everything right now. But there's a money back guarantee. There's absolutely no stipulations to it. The reason I throw this out here is you could technically watch the Ultima class. You could Watch, of course, inflection point spreads. And if you're not happy, just get your money back. There's no excuses, no questions, no commentary. There's no stipulations to the money back guarantee. I always like to throw that out there before I go any further, because again, there's a lot of stuff out there. As I said, you can go out, you can spend $50,000 on a market education, and it will pale in comparison to what we can do here at Theotrade. And you'll see why here momentarily. Okay, if you go to theotrade.com/skew, that's S as in Sam, K as in kick, E as in echo, W, theotrade.com/skew. You can actually enroll for this. I just want to bring up the enrollment form. There's one aspect about this particular enrollment form. When you come down here, the Ultima Income Generator class, okay, I'll also reference, okay, it includes a free ticket to the Inflection Point Spread class live, okay, March 1st. We have support in here. The reason I wanted to throw this in here, when you go add to cart, okay, and I'll click on add to cart here for a second, okay, first name, last name, email address, put a phone number in. The reason I say put a phone number in, your phone number, okay, will automatically enroll you for text messages. We're not going to send out an abundance of text, but putting a phone number in here in the enrollment form will automatically enroll you for text messages. We will actually text out not only Ultima trades, but of course the new inflection point spreads. We're already texting out inflection point spreads, okay? What I like to do is get people used to the trade a little bit, get you comfortable. Then we're going to lay down all the groundwork for the criteria. Specifically on March 1st is that particular trade. Again, it's theotrade.com/skew to enroll for it. And it's 3 months at any point in time. Okay. If you're not happy, you don't have to call us. We don't, listen, just email us, support@theotrade.com. All right. What we're going to talk about now is everything that Theotrade includes, a bonus, okay? We go beyond a class or one indicator or, one class over there. We literally give you everything that you want to be able to trade, everything that you're going to be able to invest at one place and at one price, okay? The first bonus here is a quick start beginner's video guide. And what this basically is, if you've never put on a trade before, and it's one of the things I wanted to show you, because people come here from all different walks of life and so forth. By the way, this is Theo. This is Theotrade. If you're kind of curious what Theotrade looks like, this is actually a chat room. Here's the actual chat room that you can communicate in. But up here is the video screen. That is our instructor. Okay, ultimately trading live with you on a day-to-day basis. Cover that in a moment. I wanted to show you, okay, the Start Here menu. Start Here menu for those of you that are brand new to this. And again, I'll reiterate. The first bonus is the Quick Start Beginner's Guide. The Quick Start Beginner's Guide is all about Options 101, Options 201. We're taking you from the absolute novice, okay, getting you ramped up, literally Options 301, okay, preparing for your trading day, order execution, part 1, 2, and 3. Even some of you that are the most experienced, okay, I urge you, watch at least order execution part 1, 2, and 3. It'll blow you away, okay, of the capacity, all right, to what you can do to get better executions. If you're worried about getting your money worth out of Theotrade, okay, just order execution part 1, 2, and 3. You're going to be just infatuated with what we can actually do. All of this course curriculum is included, okay? This is just the Start Here menu. Let me continue. So that's the first bonus, okay? Go through the training. All of that training on that Start Here menu is all mine. It's from complete newbie to entering into your first trade. Bonus number 2, we give you access to over 100 trading classes. Basically, here's what we do at Theotrade. It's all encompassing. The day you enroll for Theotrade, today, you receive access to every course that we've done since inception of Theotrade, okay? It includes, of course, the Ultima Income Generator. It's available immediately. We give you the in-out spreads class, volatility back spreads, okay, black book spreads, how to collect income being short, the risk twist class, day trading NASDAQ futures. Each of the instructors here at Theotrade have a different genre of trade, okay? Pairs trading, top 10 skills. Here, the better way to do this, okay, is just to actually show you, this is the Theotrade class archive. Options, option newbies, technical analysis, futures and bonds, stocks, day trading. Okay, I'm the option geek. I'm kind of the resident option geek here. So I'll go to, my area, income accelerator course. the Ultima income generator, tracking unusual options activity, gamma irons, back spreads, okay, volatility crash course. You get access to every one of these. How do the classes work? Watch. When I click on a class, okay, class now populates into videos, right? So this is, it's playing right now, okay? Class is actually playing. Click download the slide deck. But again, you can of course zoom this to a full screen and you're watching, you know, portions of the class. Part one, the game plan. It's game time, it's go time. Anyway, you watch in three different sections of this particular class, okay? All right, you get access to over 100 different classes. Overwhelming, sure, okay? But you have, again, all the time you want. You can binge watch the classes, okay, as much as your heart desires. So that's bonus number 2. Bonus number 3, you have an all access pass to our live trading room. 6.5 hours a day, we broadcast live. What does that mean? I start every trading session the first hour of the day, okay, when I actually execute trades. Then we have somebody like Jeff Bierman. Then we have Matt Williamson. Then we have Tony Rago. Okay, we have Brandon Chapman. Okay, and it goes on and on. Corey Rosenblum. Everybody, okay, is in here to help you and trade live. Again, we do text and push notification and trade ideas. And by the way, if you're kind of curious what it looks like when we are broadcasting live, and I'll kind of reiterate, this is Theotrade. Like when I say this is Theotrade, this is Theotrade. Okay, this screen right now is Tony Rago. What is Tony Rago doing? Okay, trading live. All right. In fact, he's even highlighted down here in the chat room as he's posting entries. He is a day trader, period. He trades NASDAQ futures, period. He's in a dome right now. He's executing live. You're kind of curious? Okay. Let me take off the mute. So he is trading live. As he talks, you will hear every nuance of his trade. Am I muted over here? No, he's playing. Okay, he's just sitting here watching an execution, waiting on his position.
Well, this thing is quiet.
All right, so apparently it's quiet right now. I'll freeze that. You can also communicate with any of the other clientele in here on a day-to-day basis. We have currently 6,000 clientele here at Theotrade. On top of all of this, we also give you, okay, direct email support. It's one of the most critical features, I believe, of Theotrade. That's why I say you can go out, you can pay 50 grand for education. It'll parallel in comparison. The direct email support, you can answer, okay, and ask and receive definitive answers on trade related questions. And I always stress that to clientele. You don't have to hedge around it. You know, my brother's sister's dog's roommate's friend has a trade on. Can you give me hypothetically what this trade might do? Listen, bottom line, send us your trades. We'll evaluate them, good, bad, or indifferent. Send us your trades. We're giving you access to all of this and all of us on email support. Here are the instructors. Jeff Bierman, analyst, trader, and former chief market technician for TD Ameritrade. Jeff Bierman is also a professor of finance at DePaul University in Chicago. Matt Williamson, market neutral premium selling option strategist. Matt Williamson's kind of like our resident in-house option engineering geek. Corey Rosenblum, senior strategist and resident swing trader. Corey's also a CMT, along with Jeff Bierman, who's a CMT. Brandon Chapman, CMT, macroeconomics, technicals, and fundamentals. Brandon Chapman actually wrote the course curriculum that was at TD Ameritrade. Okay, so they still use that course curriculum to this day. Steve Slim Miller, 43-year veteran, stock options and futures trader. Okay, Steve also is the in-house psychologist here at Theotrade. Has got a wonderful course, which I'll talk to you about it in just a moment. Tony Rago, who you just saw live, NASDAQ futures and intraday strategist. Blake Young, market profile, okay, futures, currency, and commodities trader. Blake is actually kind of our newest instructor here, but I've actually worked with Blake now for over 15 years. He goes back to the days, of course, of Thinkorswim TD Ameritrade. Brandon Chapman goes back to the days of Thinkorswim TD Ameritrade, as does Jeff Bierman. In fact, Jeff Bierman helped create most of the Thinkorswim charting packages. Here's the entire crew that we have day to day at Theotrade. We also give you access to 59 proprietary indicators and scans. We overwhelming yet? A little bit, but every proprietary indicator and scan that we use, we give you access to, okay? It's another $1,800 plus in indicators and scans. Speaking of which, I will give you the auto expected move indicator here momentarily, okay? SPX expected move, sizzle index, unusual put options activity, we have it all. Bonus number 4, the Theta live portfolio. As I had indicated earlier, okay, what you're seeing, okay, with Ultima and premium selling, we have a portfolio that we allow you to follow. We have a multitude now of portfolios. This portfolio is Ultima premium selling. You get to see everything that I do. In fact, okay, that is the account that I've been showing you. Okay, this account right here, the S&Ps, the ZB, the SPY, this is one of the portfolios. The other portfolio that we have is right here. Okay, and I'll actually differentiate in just a second. So the portfolios, okay, no holds barred trading approach. You get to see everything we do, full disclosure, all trades, opening, closing, and hedging positions. You get to watch me discuss options premium selling, okay, and every nuance in between like never before. We also now have a Theta small portfolio. So if you have an account, because immediately people say, I have $2,000 in my account. I can't do what you're doing, Don. I have $2,000 in my account. We have a portfolio specifically designed for the Theta small, okay, accounts. And that portfolio, it's anywhere from $2,000 up to about $50,000. Okay, you can follow verbatim what we are doing in terms of that particular portfolio. People, this is all a part of Theotrade. This is literally what the trades look like. So you can just get a quick glance. It's just a spreadsheet. That's all it needs to be. You can actually copy and paste any of the trades in here. In addition to it, we do a weekly video update. Every Friday morning, I'll update you, okay, on all of the positions and position changes. The one thing you guys need to understand about Ultima premium selling, you don't have to have timing here. You don't have to be sitting in front of your screen all day long like, is he going to text me? Please hold me, okay? These are really hands-off positions. Even if you miss a couple of days or whatever, it's no problem. You can play catch up on Friday. These videos, like for instance, February 11th, February 4th, every Friday we produce a video. The video is no more than 12 minutes long. In 12 minutes, we get you up to speed on every position change in Theta and Theta small. It's all done in one 12-minute video, okay? Bonus number 5, the technical analysis toolkit. For those of you that are into charts, Tech 101, Tech 201, MACDs, timing-based trading systems. There's literally pattern recognition and 21 other technical analysis courses. Bonus number 6, the day trading treasure chest. This includes intraday trading, NASDAQ futures, day trading ES blueprint, consistent intraday strategies and setups. Okay, there are 11 other day trading classes. Okay, it's all part of Theotrade. Bonus number 7. This is one more I pause for a minute and say, write this down, okay? The 5 essential building blocks to successful trading. That's actually Slim Miller's course, okay? There's no other course where ever like stop along the way, like you're here, we want to teach you to sell options premium, okay? I urge you though, watch this class. The 5 essential building blocks to successful trading. This is something that will change your entire outlook, okay, on how you approach markets. All right. This man has forgotten more about risk management that most of us will ever know. All right. I've known Slim Miller since like I'm a little kid. He's been around the business a long time. It's phenomenal, phenomenal class. I mean, like literally, again, I put a huge amount of weight into this. It's mindset mastery. That's bonus number 7. But I always say write it down because people, they just hop in there and listen to Ultima. I'm telling you, if you're going to binge watch a couple classes, forget Netflix tonight, get rid of it. All right. Disney Plus, you've been there, done that. I'm over Boba Fett. Here's the 5 essential building blocks to successful trading. Bonus number 8. There's a quick start guide to Ultima trades. Some of you already have experience. You're ready for this. So what we did is we put together, like when you open up a new piece of technology, there's like a quick start guide. We built a quick start guide. It's like a Cliff Note version of selling premium. Okay. And that's bonus number 8. Again, what our members are saying, Pat, this is a very recent email. Thank you for your reply. It's very much appreciated. Theotrade is the first educational trading service that I'm actually making profit with. Okay. And one which I can see a pathway to retirement. Regards, Pat. Okay. We include here at Theotrade everything you're going to need to invest in trade. You got classes, coaching, email access to the instructors, a live trading room, okay, indicators and scans, mobile access. And again, I go back and mention, you email us, okay? We'll give you the support. It's everything you're going to need to succeed. We've literally built like the Netflix for traders, okay? It's $297 for 3 months. A timeout. That's not an introductory price. It's $297 for 3 months. It is not a membership. If you want to do this again after 3 months, okay, you have to email us and say, I want to do it again. It's $297 for 3 months. So it's not a membership. We will never bill you again, okay? Unless, of course, you say, hey, I want to continue, with Theotrade. So I always want to make mention of that, because everything we've talked about here, from the Ultima Income Generator course, the inflection point spread course, okay, all the beginner courses, everything is handed to you literally from day one. Text and push notifications on 5 separate portfolios. Go to theotrade.com/skew. I mean, the reality, email us one time. Just think about this for a second. Email us one time in the next 3 months. If I can save your bacon one time in the next 3 months, think it's worth $300. Okay. That's why we have 6,000 clients. You can't call TD Ameritrade anymore. Nobody ever picks up the phone. You can't call, okay, even, interactive brokers, E-Trade, Robinhood. There's nobody picking up the phone, okay? We are that support. We are capable of answering trade-related questions via email, and we want you to know it. Again, go to theotrade.com/skew to enroll for it. I want to reiterate once again, Theotrade's a completely riskless trade. There's a 90-day money-back guarantee, okay? If at any point in the next 90 days, that's the 3 months, at any point in the next 90 days, if you're not totally satisfied, just email us. You do not have to give us a song and a dance. Listen, we get it. Circumstances arise in life. It's life, okay? We have a lot of people that are just, hey, man, I can't do it this summer, but I'll be back. We get it. Okay, it's fine. No excuses, no questions, no commentary needed. There's no stipulations, money back guarantee. By the way, if you receive a full refund, bonus number 1 is on us. That's that whole options 101, 201, 301 order execution. And get this, you get to view the inflection point spread class live. There's nothing we can do about that. You could watch Ultima, you could watch the inflection point spread class live. I'm telling you, if you're not happy with this, listen, people, it's only $300. Okay. We want people here at Theotrade that want to learn this business. We want people here at Theotrade that want to be here. Like, that's important to us. It's only $300. There's no, big kicker over here. It's $297. Get into Theotrade now. We're going to work with you directly. Okay. The part where we incentivize you, there are 30 spots on the Theotrade riskless deal. Effectively, what that means, the first 30 individuals to enroll today, okay, for Theotrade receive a completely risk-free ride for the next 90 days. Again, we do that specifically to incentivize you to enroll today. We give you unlimited email mentoring, and people come back and forth with this all day long on emails. Send us your trades. Right? We don't shy away from saying, like, hey, this is a great trade, or hey, this is the worst trade I've ever seen. The $297 riskless offer, it's never been available before with Ultima Income Generator. And now we're including inflection point spread class. Again, the inflection point spread class is coming March 1st. So as I said, we need to get you enrolled, get you up to speed. I want everybody to watch the Ultima Income Generator course before coming to the inflection point spread class. Okay, it's a little bit of a prerequisite. Again, one of our members is saying, my closed year-to-date profit from Ultima Trades has paid for my yearly Theotrade subscription. Okay, this is everything that you get for $297. Ultima Income Generator. Okay, quick start beginner's guide. This is 100 different trading classes, VIP membership, of course, to the chat rooms, unlimited email mentorships, all 5 portfolios, the Theta live portfolio. Okay. Tech analysis toolkit, day trading treasure chest, mindset mastery. That's actually the class from Slim Miller, the quick start guide to Ultimate Trades. Okay. As I said, go to theotrade.com/skew. This is from Jeremiah. My first 4 trades following exactly the details in your Ultima class just closed out using GTC orders set right after getting into these trades. This paid for your class in less than a week. Very thankful I subscribed to your services. Keep up the good work. Thanks, Jeremiah. I'm actually going to take you guys over to this page now, theotrade.com/skew. You can also follow me to this link for the auto expected move indicator. just want to kind of reiterate on this particular page. If you need anything, you could just kind of hit us in support right now. There are 30 riskless spots, the first 30 individuals, okay? I will read off your first name and your last initial to confirm that you've actually enrolled in one of the 30 riskless spots, okay? It takes me about 5 to 7 minutes before I actually see, okay, your name populate in here. Also, just a quick tip, as you're enrolling for it, again, I want to reiterate, please put the phone number in. Putting your phone number in there automatically enrolls you for our text messaging. If you're out of the country and cannot receive text messages, it's actually not a problem because we have our own mobile application, and our mobile application can actually do push notification. And push notification, what does it do? Okay, ultimately you don't have to have text messaging. It just pushes the notification. It can even come up on your watch, for example, if you're so inclined. All of that is in here. By the way, you can do one payment of $297, 2 payments of $149, 3 payments of $100. Okay, all of it is if you're one of the first 30 individuals, it's money back guarantee on there for the first 90 days. All right, so you go to theotrade.com/skew. There was somebody else that popped that in there, theotrade.com/skew. If I scroll towards the bottom of this page, I just wanted to reiterate, okay, here's the auto expected move indicator. You can download that. For those of you that are enrolling, you need not download the indicator. We give you all the indicators on the Theotrade site. That's all part of it. Okay, if there are questions, I am going to actually answer some generalized questions. Okay, and then I'm going to come in here and answer a couple of specific questions for you guys. So again, it's theotrade.com/skew. Let's make sure we get all these questions answered. What are members saying? Wanted to drop a quick email. Think the class is wonderful. I've been stretched each session, but not beyond my capability. After each session, I watch the recording and do the homework. Okay, I feel each week that my knowledge of options trading is growing steadily and rapidly. Obviously, I can't speak for my classmates, but it's going very well for me. Thanks for the great instruction, Jeff. Okay, this is from Todd Summerall. Okay, let's just jump forward right to some of the Q&A over here. Make sure everybody's on the same page. By the way, I will read off, okay, a couple of the names as they do populate in here. Apologize, I'm going to actually use my iPad, a little easier to read than the my other screen in here. So, by the way, the IPS class, I'm getting excited about. That's the inflection point spread class. Okay, I know a lot of people, they come here and they're like, oh, man, this is a little overwhelming. For $297, would you rather be overwhelmed or underwhelmed? Okay. The IPS class is going to push things over the edge because that one is it's taken me a long time to put together this particular class, but it is going to be worth it. I'm actually rather excited about this this new class because one of the things got to understand about this marketplace, we got to be able to sell premium regardless of market environment, and the inflection point spread is going to give us the ability to put premium selling trades and hedges on. It doesn't matter if the market's crashing, whether it's rallying, okay? The trade is going to be packaged as hedge and premium sell in one position. And it has taken a tremendous, okay, amount of time and trading to be able to actually dial in this criteria. So we don't go through and just like, oh, let's model this and make sure it works. People, we trade for years, okay, to fine tune trade setup, to fine tune execution. All right. Some of the general questions, and then I'm going to get to some of your specific questions. Everybody always asks us, what do I need to get started? An internet connection. You know, I put in here a laptop. I don't even think you need that anymore. I think you can do this off of any tablet. So I trade extensively, okay, even on my iPad. I'm a big believer of tablets. I don't sit in front of these screens all day long, although I do have multiple trading screens. I love actually trading off the tablet. There's something about like touching the marketplace that just does it for me. I also like to throw this out. You don't have to have like the iPad Pro. If you're looking very carefully, this is your $299 model on sale at Walmart. Again, because I'm just not a big believer, like whatever, every couple of years, grab a new one for $300. We have everything you're going to need to get started, from absolute novice, okay, to some of the most extreme traders. The second point that I always love to make, the $297, okay, This is not a membership. We're not like a gym where you can't get out of the membership. It's not a membership. It's $297. Okay. After 3 months, if you want to do it again, it's $297. That's it. So we're not going to auto renew you or bill you again, unless of course you want to continue. Number 3, we provide a Theta weekly video update. And that basically is just keeping you up to date on all the premium selling strategies that we're presently using. That will also include, of course, inflection point spreads. We are already actively trading inflection point spreads here at Theotrade. Okay. The class comes March 1st. Okay. It's kicking off, is it 9 a.m. Central Time. Okay. Number 4, we archive everything. We get it. You can't watch everything every single day. You don't have 6 hours a day, but there might be really specific details, classes that you might want to review. We archive every spoken word on Theotrade, literally everything. You can actually download it onto your device and even watch it at, like, for instance, 2 times the speed. I sound like a chipmunk, but it is what it is. Okay. We, number 5, we provide you access to Theotrade mobile. You can download archives, as I said, view at your pleasure. Add your cell phone number, okay, when enrolling to receive trade ideas via text message, and download Theotrade mobile for push notification. So, by the way, Theotrade mobile, just to give you a quick heads up, Theotrade mobile will work, okay, Android, iPhone, you name your device for the most part, and it's going to run on it. And it's actually really important that you guys understand that. By the way, I'll read off the first batch of names here momentarily. I'm just looking, and as I said, it takes anywhere from 5 to 7 minutes for me to see who is actually enrolled over here. And I will have those names for you here momentarily. Oh, there they are. They're populating. Okay. So add cell phone number. That's always important. By the way, if you don't, we can add it later, but we also do push notification. So some people are like, oh, okay, I missed, a text message. If you missed your text message, it's got push notification. If you missed your push notification, it's got your text message. But again, there was somebody that hopped in here earlier from like Singapore, okay? And it's, again, in Singapore, you probably can't receive US text messaging, so it's fine. We'll do push notification to you. That works around the world. We have a lot of clients, Singapore, Australia, India, you name it. I mean, we're pretty much all over the globe right now. Number 7, you can email us anytime, receive a response within 24 hours. This one I put huge weight into, and I always stress this because in today's market environment, there's nobody else you can really reach out to for help. Okay. And I'm not trying to diminish, TD Ameritrade or some of the other brokerage firms out there. The brokerage firms now have all become like they've been gobbled up, like Schwab owns TD Ameritrade. Everybody it's Walmart, like they're Walmart of brokerage firms. And I'm not trying to disparage Walmart. But you guys get what I'm saying? Like, you go into Walmart, it's like impossible to find anybody to help you these days. Okay. Good help is hard to find. If you need something in this business, we have thousands of members here. Okay. Several thousand of our members will tell you, like, man, I go to Theotrade because if I have a problem on a trade, these guys actually answer the questions. Okay. And I don't mind telling people, like, email us. Okay. That's what we're here for. I answer a good 3-4 hours of email every single day. Okay. Doesn't hurt. I do most of it actually on my iPad. This predictive typing is pretty good. It knows what I'm going to say. My iPad knows more about options trading than most do. But in all seriousness, like, email us, and you're allowed to bounce trade ideas. And that's where people say that's kind of a sticky subject. Listen to me. Okay. Most of us here at Theotrade come from the brokerage and market making world. I have held a series 3, which is what? That's your futures licensing. I've held a series 4, which is a principal options broker dealer. I have held a series 7, which is your general broker dealer. I have held a series 24, which is your principal broker dealer, not principal options broker dealer, but you're an options principal, or sorry, just a principal broker. I have held my series 66, which is a 60 what? You guys know that one, the 66, 63, and the 65 combined. It's a registered investment advisor. Early in my career, I helped manage $400 million. Like we've been there, we've done that. Okay. I've got, the stamps along the way. The licenses mean nothing, but you have to understand we know how to answer trade and trade related questions. Okay. And there's no stepping over a line. Like, listen, if you need help, fire it at us. Okay. And I implore you to do so. The trade related questions is always important because, again, I feel like today there's nobody that can help you. The one caveat, got to give us a little bit of time. I always throw the 24 hours. Most of our emails are not only answered same day, most of our emails are answered, okay, within the hour. The reason I throw the 24 hours in there, please don't email us on a Friday afternoon. There's 10 minutes to go to the cash close. Listen, we trade, and most of the time we're answering emails before market or after market close, okay, because we trade. Number 8, you gain access to everything we've done here at Theotrade since inception. There's over 5 years. There are literally tens of thousands of hours, okay, inside of Theotrade archives. It's insane. By the way, we're now doing, okay, almost 3 million minutes a week streamed to our clientele. 3 million minutes a week of content is now streamed to our clientele. All the archives that we have are searchable. Name a trading topic, and we have an archive on it. Number 9, variations of the trades are available so that you can do these trades in an IRA or retirement account. We talk about that extensively. $5,000 minimum in the IRA, $2,000 in a Reg T margin account. Number 10, we can help you get approved, okay, at almost every major broker dealer we have relationships with. But if you're into specific types of trades, like Ultima trades, we are actually going to say, like, this brokerage firm lets you do this brokerage firm doesn't. Okay. Forget about like Robinhood. They're not going to approve you for that. TD Ameritrade lets you do this. Okay. Tastyworks lets you do that. We will give you specific guidance. Some people say, I'm Canadian. What do I do? I live in Europe. What do I do? Who do I go to? We will give you details regarding those brokerage firms. Remember, there are 30 riskless spots available. Okay. With that, let me actually read off a couple of the names over here. Ryan H. from Minnesota. By the way, the individuals that I'm reading off right now are the individuals that are in that first list of 30 people, of course, that apply to 90 days riskless Theotrade. So Bill K. from Florida. Sorry, Ryan H. from Minnesota. I wanted to make sure. Bill K. from Florida, Vicky M. from North Carolina, Dick M. from Illinois, Constantine K. from New York, Guadam K. from New Jersey, Steve D. from Tennessee, Martin T. from Minnesota, Richard W. from California, Jeff B. from Texas, Timothy F. from California, Dennis B. from Ohio. I don't want to kill this name. Keela G. from Hawaii. Did I get that one right? Okay. Donald K. from Nevada, James H. from Arizona, Albert H. from Illinois, Lauren D. from Utah, David A. from Washington, Robert F. from South Carolina, Roger L. from Ohio, William D. from Florida, and Shandu G. from Virginia. I think that's, I'm reading off, that's about the first, just at a glance, it looks like about 23 names. Okay, so there's about seven spots open left on the riskless deal. Obviously, you guys still have plenty of time to enroll here. I'm now going to answer some specific trade related questions for you guys. When I say specific questions, this is stuff that's come up in the chat room. It takes me, again, about 5 to 7 minutes to see you having had enrolled. So it's theotrade.com/skew. All right, Cedric asked a really specific question, and it said, will this allow me over a period of time be able to replace my job income, like $10,000 a month? So I'm going to be fair with you. I'm going to tell you right now, Cedric, listen, I don't know how much capital you're starting with. Okay, realistically, absolutely, like $10,000 a month is doable, but you got to get, the capital built up. The other thing is you got to get the skill set down. One thing that I always try to explain to people, and again, we try to be as forthright, capital isn't linear. What you can do with $10,000 account, okay, in a year is different than what you can do with, for instance, for $150,000 account, right? So it's not linear. Like to say like, oh, I can make X amount on a $10,000 account. Well, you can make maybe a little bit less percentage if you had, for instance, a $500,000 account. With a $500,000 account, the allocation is unique on that particular front. So Cedric, have no problem, like, feel free to shoot me an email directly and say like, hey, this is the kind of capital I was thinking about. And, I'll tell you if you can do 10 grand a month, with that. Because one of the things, I don't think it's fair. Like, I don't think it's fair to generalize everybody either. If you have $100,000 account, okay, I don't want you to put that kind of risk on the table. Like, you got to understand that I don't know what kind of stomach you have for risk, and I don't know how much you want to put up in any, given trades. So again, we'll actually go through all the different risk scenarios to make sure that you're comfortable and I'm comfortable with whatever you're doing to try to replace some of your monthly income there. Okay. This one said you're not selling naked options if you have the VIX volatility spread hedge on every trade. So the VIX volatility spread hedge, okay, there's always going to be some type of hedge in play. There's always going to be some type of hedge in play. And if you look at this account, here's actually a hedge. This hedge only has 13 days left, but I have 100-point wide spread hedging, okay? The sale over here and actually the sales in here. This one also has an inside hedge, okay, to a 3-4-5 ratio. So this right here, and again, I'm just highlighting stuff for you. This is a 100-point wide spread, and that 100-point wide spread is actually reducing the risk of the sale of a put. So it's not always a VIX volatility spread. It depends on market conditions of which hedge I am actually going to use. All right. All right, let's move on over here. I like this, and I want to reference this one again. The trouble with this is I can't afford to sell naked options. So yeah, you can, because as I was showing you guys a moment ago, again, I have a fairly considerable position on over in Tastyworks, okay? And I'm just highlighting some of the trades I have on over here. You can see there's only $8,768 of a cap requirement. That's the capital requirement. Don't worry about the spider position. It's a totally different account. But this position, that's in an IRA, okay? That is inside of an IRA, and that is not, all right? And it's great in terms of the margin. And that's huge premium that I'm producing off of it. I mean, that's like, most people don't get like how much premium I'm actually producing. Okay. The other thing is, I don't mind showing you this. Okay. All the premium sales I have in here are what? Okay. If you haven't noticed, all the premium sales I have in here are profitable. What's losing money? You go, oh, something's losing money in his account. Yeah, it's called the hedge. The hedge should lose money. It's the lamb to the volcano. All right. Onward and upward from there. Selling calls can be done at any brokerage account. So Rosemary asked that. And the answer is no. Almost every major brokerage firm, okay, would allow you to sell calls. What they don't allow you to do is this. Selling naked calls inside of an IRA is a big no-no at most brokerage firms. But actually, the IRS changed the regulatory guidelines and said, no, you can do it. But there's only 2 brokerage firms that have actually picked up on it and allow it. You can absolutely sell naked options inside, okay, of even retirement accounts these days. We'll actually give the right brokerage firms to effectively do so. So, all right, onward and upward from there. When selling premium, is it better to sell MES as a strangle as one? Okay, make sure you make or sell one side of it. So it depends on the volatility. So people are talking about, do I sell a call and a put simultaneously? Just to clarify, do I sell a call and a put simultaneously? Okay, or do I break the trade up? And the answer is that's actually covered inside of the class. It depends on the volatility. So it definitely depends on the volatility of that marketplace. All right. All right. I trade E-minis intraday. Will this affect my margin to alleviate the ability to day trade? Okay. So no, you'll be okay. It will eat up some of your margin, but it depends. Like if you're trading E-minis on an intraday basis, do you already have 1/4 margin on those E-minis? So that's something I could probably answer for you a little bit more like 1-to-1 is I don't have no idea who you're trading with. So if you kind of tell me who you're trading with and shoot me an email on that one, I'll tell you exactly what some of the margin restrictions, some of the additional requirements would be. So when you have like a $20,000 account, the $20,000 account would be fine trading E-minis, but is your margin full boat or is your margin actually 1/4 of the value? Basically, what we're getting at is different brokerage firms use actually different intraday margin requirements depending upon if it's a futures brokerage firm, if it's an options brokerage firm. I can help you kind of clarify that one a little bit. So I want to read off a couple more names and we'll call it a day over here. Okay. Oh, I like this. Are options on futures showing the same advantage in decay? Cindy asked that one. And the answer is, yeah, options on futures are actually the exact same thing as standardized options. And a lot of people don't realize the options on futures provide some incredible benefits above and beyond standardized options. And it's one of the things actually we display inside of the Ultima class. I mean, one of the things for those of you that do not know this, if you're trading in a regulation T margin account, you should look into regulation 1256. It's called the 60/40 rule. Options on futures actually, okay, have a better tax consequence for some people. It depends. This is where I'm supposed to say, talk to your tax attorney. But a lot of options on futures trades, okay, are actually even more efficient for tax purposes. But you can also trade options and futures inside of an IRA, which is tax deferred, in which case the benefits still outweigh because you can trade less, right? And do more, meaning it's actually cheaper overall for commissions as well. So a couple more names over here. Joseph V from New Jersey, Amy P from Wisconsin, Michael O from Mississippi, Daniel P from Missouri. I think I got most of the names right off. Listen, I've gone way over my time today. I hope that I got each and every one of you and some of your questions answered. If I didn't, please, I implore you. It's just support@theotrade.com. I always stress to people, okay, no problem whatsoever answering emails and answering emails to the masses over here. So just go to support@theotrade.com. Again, here we are. It's theotrade.com/skew. If there is anything you need along the way, shoot us an email, call us, talk to us. We're here to answer questions. We're also live inside of the chat room. So literally you can enroll today and watch Corey Rosenblum will be on here in about 10 minutes and take you into the close. Stacy's also here to help you in the live chat if you do need so or have any questions about enrollment today. Thanks again for everybody joining us this afternoon. Sorry, I've gone a little over here on time, and be here whenever you need us. Thanks, everybody. Have a great afternoon. Bye-bye.